first thing first, do you guys have your notebooks? I know some of you have already done this, but before you mark that, I am hoping that you guys have all downloaded your demo account. Has everybody downloaded their demo account?
Yes.
All right, perfect. Yeah. First thing you want to do is stay in the demo. Don't you ever jump into the live account until you're comfortable, until you know exactly what it is that you're doing, because the minute you get into the live account, that is your money on the line, okay? So for me, I had to practice everything on a demo account. So if you haven't, make sure you create a trading account with a broker. If you haven't, I'll send you the broker that I use. The last thing I want to do is just have one broker, and then just in case anything happened. But I also, we were talking about their spreads are too high. So what I did was I opened up a second account with a second broker, and I'm going to send you guys the link. So for all my Forex trading, I'm gonna do with this new broker, all right? And then for my crypto, I'm going to use Hugo's way, all right?
Okay.
I'm going to send you guys everything, so you don't have to worry about that right
now. You're using Hugo for what now?
For Bitcoin.
Okay, and why are you using two different brokers?
Because Hugo's way, which is a broker that I've been using. Can you guys hear me clear? Because we're having some issue with audio here.
Yes.
There's no echo in the either. It's somebody who has two devices, because I'm hearing a big echo. I think it's clear now. All right, that's good now. All right, so let's start all over again. I promise you this time I won't stop. So anyway, what I was trying to say is I have two brokers. Somebody was asking me why I have what I'm using Hugo's way for. I'm using Hugo's way now for just crypto. And I do Bitcoin from time to time, all right? You do not have to get into Bitcoin right now. If you're not sure what you're doing in the Forex, don't even try Bitcoin for now, all right? So you can still trade Forex on Hugo's way, or if you want to use the other broker, I'll send you guys the link. I like them. I started using them about 2 weeks now. So I'll send you guys the link. So it really doesn't matter. But I find that the spreads are much, much tighter with the other broker. So that's why I'm using them for Forex, okay?
Okay.
So does everybody has a demo account?
Yes.
Okay.
Yes.
Have you guys started practicing on your demo account?
I have.
Yeah.
No.
Okay, perfect. No, who say no?
Ingrid.
Okay, so make sure that you start practicing on the demo, but we're gonna go through all that, so you don't have to worry about that. But what you want to do is make sure once you set up your broker account, and I'm assuming most of you have done that, is set up 2 accounts. Set up your demo and set up your live account. You don't need to put money in the live account. It just needs to be set up, okay? No need to put in money. It just needs to be set up. The next thing you guys need to do is download MetaTrader 4 on your phone. Okay? Everybody has MetaTrader 4 or not? You go to your app store, whether you have Android or iPhone, wherever you get your apps, you download. Can you pull out MetaTrader 4 for me? I'm going to show you how it look like. Dorit, do you have MetaTrader 4 on your phone?
Yes, I do.
Oh, okay, perfect.
Yeah.
They look, oh, they can't see. Look something like that.
It's kind of hard to see.
All right. Now, on your computer, the MetaTrader that you're going to install on your computer, get it directly from the broker. Okay. Don't go through the regular MetaTrader because, especially if you have an iMac computer that you have. Make sure you go straight to the broker's website and you click where it says download the form, okay? So you get it straight to your computer. So that way you have it on the phone and you have it on the computer. So that way when you're not home, you can enter a trade on your phone and you can close a trade on your phone, okay?
Okay.
This is the one that I believe maybe most of you don't have. Number 3, create a free account with TradingView website. That is tradingview.com. Anybody familiar with TradingView? Yeah.
I have it, yeah.
Okay, Cora, you have it. So
You helped me with that
okay. So
a week or so ago.
give you guys the link to go to TradingView and set up a free account. You don't have to pay. They have a paid version, but you do not have to pay. You just need to go there and practice your chart over there. So I'll send you guys the link for that. You also need to go to your phone and find TradingView app on your Android or your iPhone. TradingView on your computer and TradingView on your phone. Is that clear?
Mm-hmm.
Yes.
Yeah.
TradingView is a website that allows you to practice to draw your chart. It's much user-friendly. It's better than your regular MetaTrader 4, okay? As far as marking your charts. I mark all my charts on TradingView. Then I usually enter my trade on the phone or on the computer.
TradingView has more capabilities.
Yeah, they have more features. They have a lot of
Indicators.
features. Okay, next thing, this part I know none of you has it because I did not do mine for the longest. I just recently did it maybe about a month ago. Create a free Coinbase account. I'll send you guys the link so I make sure you have the right website. All right, it's called Coinbase account. It's free. You don't have to pay anything. And this will help you fund your account if you're trading with a broker who only accept Bitcoin. Most of us see brokers only accept Bitcoin. All right, Hugo's Way accept Bitcoin, and all other brokers that I know, they will accept Bitcoin. So I'll show you guys how to just fund your account using Bitcoin. You don't have to worry. So you transfer money to your bank, it goes in there, and you pay, and that's it. And if you need to put money back to your account, it takes about 2 days to transfer the money back to your account in US dollars, okay?
Okay.
Coinbase is also a great place to trade if you need to buy cryptocurrency. So these are things I'll talk to you guys later. I don't want you guys to start thinking about crypto or Bitcoin until you're good with Forex. Okay? Those are things you need to set up. They are all free, nothing paid. Places like TradingView, they have a paid account, but you don't need to pay. So the next thing is making sure that you go through the entire training inside IML Academy. I can't tell you how important it is, you guys. I've seen people join IML and they go through the basics and they run over to start trading because everybody is excited about oh, why is it so? Hold on.
You're making it darker.
I'm making it darker.
There you go. That's as bright as
Okay. Most people are excited about making money, so they jump immediately to start making money. And once they do that, they miss all the lessons and they start losing money because they did not go through the entire training. Please, 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 while you're practicing on your demo, make sure you go through the entire academy. If you don't learn everything, you're going to not make money or you're going to lose money. This is trade, okay? You want to make sure you're making money. You're not here to lose money. Everything you need to know about trading from A to Z is covered inside IML Academy from basics all the way to advanced, okay? So here is a screenshot, all right? You guys are familiar with this? You go to IML online, your academy, you click on technical analysis, you learn the basic here, move on to technical, go to intermediate and advanced, okay? And then market geometry and harmonic. I'm actually still learning harmonics. I am not good with harmonics, so this is where I am. And some of these, you guys, I actually personally had to watch them like 2 or 3 or 4 times, but it all depends on your learning curve. Some people learn fast. I know I'm a slow learner, so I have to watch a video sometimes 2 or 3 times before I figure out what it is saying. So, however you understand, you will know when you are ready to move on to the next one. If you watch the basics and you feel that somebody has background noise or echo, I'm not sure. I hope you guys can still hear me clear. I just want to make sure you guys can hear me. I'm good?
The background noise.
Say that again?
I said there's a lot of background noise.
Yeah, and I'm not sure. Can you guys mute yourself? But if you have a question, you can unmute yourself.
Yeah.
That way, we can make sure that Everybody can mute, but I want to make sure that you guys, if you have any question, you can still come back and mute yourself and ask. So it's going to make it much clearer for everybody. All right, so anyway, I was saying, once you go through the basic, do not go to the technical analysis until you're comfortable with the basic. You understand what is leverage, what are pips, how do you measure pips, you understand what is lot sizes, you understand who are the bulls, who are the bears, how does the market move, you understand the trend line, the support and resistance, you understand all those basics, okay, before you move on to the next level. Then do the intermediate, advanced, and so forth, all right? Make sure you don't start clicking on all these other things until you understand the basic. It's going to help you a lot with your trading once you go through the basic and go through all the way step by step to harmonic. Now, that does not mean that you guys can't start trading until you learn the harmonic or the market geometry. Personally, I think once you're good with technical analysis, the intermediate, by the time you get to advanced, you're practicing on the demo. So you can do these last two. That's what I'm doing. You can do the last two while you're still trading. So you don't have to sit and learn everything there is and then I'll start trading. Start with the demo. The more you practice on the demo while you watch these videos, it's going to make a lot of sense because now you have a demo account that you're practicing on. So let's say you're watching a video that is talking about support and resistance. Then you can go back to your demo and look at it. What is it they are talking about? All right. Let's go to the next one. Okay, so we talked about start on TradingView. So when you go on TradingView website, which I'm going to give you guys a link, the first thing you do is pick a pair. And a pair is a pair of Forex, like Euro USD, that is Euro against USD dollar, or GBP card, that is Great Britain pound against Canadian dollar. You can do something like AUD USD, which is Australia dollar versus US dollar. So there's many pairs. You pick any. Right now you are practicing just any pair because you're not putting in real money in the market. Because the most important thing is practice how to mark your chart. So it really doesn't matter at this point what pair you pick. Just pick any. When you go in there, you'll be able, and I'm going to show you guys how to do it at the end of this. So pick a pair. Create your TradingView template and save it. I'll show you guys how to do that and get familiar with the features inside TradingView, right? That's where you're gonna spend most of your time marking your chart, inside TradingView. The first thing you do when you open a market chart is analyze your price chart from higher time frame to lower time frame. When you look at your MetaTrader form or you look at the TradingView website and you open a chart, you'll see that there is monthly, there is weekly, there is daily, there is 4 hours, there is 1 hour, there is 15 minutes, there is 5 minutes, there is 1 minute, all right? So basically what you do is look at the chart, overall chart. If you're picking up here, let's say for example, Euro USD, what you wanna see is for the month, which direction is the price moving? All right. So start by looking at the month. Even though you are not a month, you're not trading for the entire month. You're not a swing trader. You are trading. We are day traders. We trade in during the day. Okay. Or you trade a few hours and you close your trades. You take your profit. You're done. There are people who keep their trades for weeks. Others keep them for months, even years. But those are people who have millions and millions of dollars to keep money in the market, or banks or governments or hedge funds. We are not those people. We are just retail traders. So look at the month. It's going to give you a bigger picture of whether the market is moving up or the market is moving down. All right. You'll be able to see with a bare chart, your eyes will be able to tell you which way the market is moving by just looking at it month at a glance. All right. Do not start charting until you know where are you within the month. For example, we are in the month of August. It will take 1 full month for one candle to form, and we'll look into that. So look at the month, then go down to weekly, so you know that for this particular week, where is the market? Is it going up? Is it going down? Which way is it going? All right, that's weekly. Then you go down to daily, and you look at your chart. Where is the market going today, for the day, for 24 hours? Then you go to 4 hours, you go to 1 hour, all right? And you can even go to 15 minutes to 5 minutes. Usually we only go to 15 minutes and 5 minutes to find our entry point, right? Personally, I mark my charts on the 4 hours. I usually mark 4 hours and 1 hour, all right? And then I go down to 15 minutes to try to see what the market is doing. And then that's where I find, and then sometimes I go down to 5 minutes or even 1 minute only to enter the market, all right? I do not enter the market on the monthly or weekly or daily or even 4 hours, okay? Let's see. The first thing you want to do, and I'm sure if you've gone through the basics training in IML, you know about support and resistance. The first thing you want to do is identify areas of support and resistance in the chart. These are areas where price tends to stop and reverse or pull back. When you look at your chart, and when we go to the chart, you guys will be able to see that there are areas where you see the market going up and down, up and down. Any area where the market reaches, the price reaches, it stops, and then it goes back or it pulls back a little bit, that is an area of support and resistance, okay? These are areas where price tends to stop and reverse or pull back. For a zone to qualify as a support and resistance, price must touch those levels 2 times or more, 2 or more times, all right? If you look at your chart and you see those candles going up and down, and you see they reach a certain point and then they go back. They go back to the same zone again, they go back. The third time, they go back. That is a strong area of either support or resistance, right? It will make sense, you guys, when we look at an actual chart, but I want to make sure that I go through these things so that you guys, when you get to the chart, you understand what you're looking for. Okay, so here is another one. This is so important, you guys. This is all you need to know. This is everything you need to know. Trade, whether you are trading stocks, whether you are trading Forex, whether you are trading futures, whether you are trading cryptocurrency, the market moves in 3 different ways, okay? 3 different ways. Number 1, it moves in an up trend. That means the bulls are pushing the market up, okay? The market is going up, price is going up. That's called an up trend. Number 2 is a downtrend. That is when the market is going down, okay? The bears are pushing the market down. It's only bears and bulls in the market, nobody else. The bears pull the market down, the bulls push the market up. That's all you need to know. What?
Can I explain range or consolidation?
Yes, you can.
Okay, cool. So basically, range or consolidation is when the bulls are trying to push the market down and the bears are trying to push it up at the same time, and neither can outgo each other, neither can be stronger than the other. So the market's going to move sideways.
Exactly. She got it. Yes. So consolidation or range is when the market moves sideways. Now, here is the thing. You never, ever, ever want to trade on a sideways market. If you look at your chart and the market is moving sideways, please, please, please do not get in. Do not get, and I'll show you guys why you don't want to get in when the market, and you don't need, you guys, these are just things. One thing I learned about trading, all you need to do is use your eyes. Everything you need to know about this market is right in front of you. You just have to train your eyes to see the patterns. You just have to train your eyes to see the movement. Which way is the market going? Where is the market coming from? Because market, price, movement repeat itself. What the price did last week, it will do again this week. What the price did even last month, it will repeat itself.
Even years.
So yeah, sometimes even years. You could go back to the year 2005 and find that the same thing the market did is repeating again, all right? So make sure that you understand. Well, we don't go further back, you know, and I used to when I first started, like I'll look, I'm like, oh my gosh, this price was here 10 years ago. And sometimes you'll find yourself in that situation. Like I have a few trade right now. I think one is UJ, US dollar versus Japanese yen, and it has really reached the bottom. Like I'm in a place where price was in the year 2013, okay? And that's the only thing I have to work with. So your eyes are going to tell you what the price is doing, what the market is doing, where it's going and where it has been, and then you make a decision where you think the market is going to go based on what you see that happened in the past, okay? Now, again, avoid getting in the market during consolidation. wait for the market to create a trend before entering a buy or a sell position. Okay, because you know, you guys, when you trade Forex, you can either buy, you can sell. That's a good thing about Forex. Unlike stocks you buy, you hold on to them and pray that the price goes up so that you can sell your stock. With Forex,
I love sell high.
yes, buy low, sell high. It's the same thing even with Forex. You want to buy low and sell high, okay? But with Forex, we go in the market either way. We don't care whether the market is down or up. It doesn't affect us. If the market tanks, like you guys, you saw last week, I don't know how many of you looked at your charts last week, is it last week or 2 weeks ago, when on the news and everybody was talking about the market has tanked. It didn't affect us because we just knew US dollar is going down. So we're just going to get down with it. We're just going to be sellers today or tomorrow or this week. We're going to be sellers. Check the president's Twitter account. That will give you a lot of hints. Whenever he says something on Twitter, run over to your chart because you know, okay, he says something based on whether it was positive or negative, which way is the US dollar going to go. So these things are very, very easy, you guys. They are right there in front of us. It's amazing how much tips are out there that tells you which way the market is going or which way to avoid.
With the you know how the rainforest in the Amazon forest is on fire, would that affect the economy because that's not in
No, because Brazil is not one of the pairs that we trade.
Okay.
All right, so here is an example, you guys, of an up trade and a down trade. When you open your chart, all that your eyes are going to see is something that look like this. All right, the market, when it goes in an up trade, it creates a higher high and higher lows. Higher high, higher lows, higher high, higher lows. Now, what we do and what I personally do and learned to do from IML is you don't wait for the market to create an entire up trade in order for you to jump in, because then you'll have missed most of the money. All right, you just need to see the first move, the second move, and the third move. All right, for example, if you look at this chart here, you guys can see it. Just give me a thumbs up because you're muted. Give me a thumbs up. Let me know you can see this. Oh, I can't even see you. I only see Cora. Oh, thumbs up. We good? All right. So if you look at this up trend here, the first movement up where it says low to high, then there's a pullback that says higher low, and then there's another push up that says higher high. Okay, usually they refer to this as impulse, correction, continuation. That's all you need to see that the market has formed. Okay, so when you get to your chart, don't wait until a whole trend moves up to say, okay, it's an up trend, I need to get in now, because then it might be too late, or you might make money, but not as we want to catch the most peaks, which means to make the most money from the beginning of the trend. But you can't enter here. You have to let the market create a trend. No sideways, not 1 and 2, and then assume it's gonna go down, because you might get here, and guess what? The market pushes down. So wait for it to form 1, push back 2, continuation 3, because it's pushing up. When the market is going up, you get in as a buyer, right?
Mm-hmm. But there are going to be little pullbacks in between too. It's not going to be a perfect straight line.
Exactly. Now, this line of mine is perfect. Like Jasmine said, don't think that when you get in the market, it's just going to be one line, another line, and another line. Okay, those candles you're going to see blue, green. If you don't have background noise and you want to chime in, that's fine. The market is going to have green candles, red candles, but you're going to see the majority of the candles pushing up are green, not red. Depending on how you draw your chart. Most of us use green and red candles.
White and black.
Or white and black. I use green and red. Red goes down, green goes up.
Liz?
Yes.
I have a question. Are you saying you should get in on the higher high? That's the 1, 2, 3. That's the third one?
Yes, you just need 1, 2, and 3. It's impulse,
Okay.
pullback, which is correction, and then continuation, which is also called impulse. All right? Because if you wait for like 10 of these forms, then by the time you get in the market, you're already at the swing high, or you're already at a support and resistance, and it's too late for you. Okay? So you just need to do those 3 moves. 1, 2, 3. That's it. You have to know which direction the market is going. We'll look at it on the chart. If you see this, you're coming in as a buyer. You're buying whatever. If it's USD card, that means you're buying US dollar, you're selling Canadian dollar. If you come in as NZD, GBP NZD, you are buying Great Britain pound and you are selling New Zealand Kiwi or New Zealand dollar, okay? Then the other one is a down trade. What?
That, look, when this could have been like a resistance right here.
Yes.
And then it turned into a support.
Yes, yes, and we'll get into that. So the next one is a down trade, you guys. As you can see, the market is going down. Now let me back up. The best way to know which way the market is going when you open your chart, for an up trade, the chart will move from the top, from the bottom, sorry, it will move from the bottom left corner of your computer headed towards the right top corner. That's a good way to know where the market is going. If you look at the chart like, oh my gosh, I don't know what these candles are and I have no idea. An up trade will be moving. You can see my lines. See how my lines are? Okay. An up trade moves from the top, the bottom left towards the top right of the computer. And the opposite happen on the other side. Down trade will be moving from your top left towards the bottom right of your computer. All right. So again, with a down trade, you get in as a seller, and all you need is 1, 2, 3, you get in as a seller, okay? You don't need the whole move to happen for you to get in, okay? 1, 2, 3, make sense? And you get in as a seller, and I'll show you guys later how to determine your stop, where you stop and take your profit, or where you set stop losses and all that. I just want to make sure that you guys can identify the trade for market, because you cannot mark your chart if you don't know the trade. You do not get in a trade if you don't know which way the market is going. But again, your eyes will tell you by looking at a chart with your bare eye. You don't need to overthink it. Just is it moving from the bottom of my computer towards the top right? Oh, that's a buy. Is it moving from the top left of my computer towards the bottom right of my computer? That's a sell. That's all you need to know. Okay. Let's see. Any question, you guys? If you have a question, unmute yourself. I am here to answer it for you.
Hi, Liz and Jasmine.
Yeah. Hey.
Hey. Okay. Can you please repeat that? So when you say when it's moving up from your left, that's what is that? The uptrend? What?
Yes. Okay.
Is that a good? That's a good thing.
Yes. Let me repeat. Okay. When you open your chart, okay, and we'll look at it. When you open the chart will move 3 different directions. It will either be going up, it will either be going down, or it will be going sideways.
Consolidation.
Consolidation.
Is that consolidation?
Consolidation. Now, let's start with the up trend. When you look at the market that is going up, when you're on your computer, that chart is going to be moving from the bottom left of your computer headed towards the top right of your computer. Okay? Bottom left, going to top right, that's an up trend. And you can see this line I have here. You can see it's moving from this corner of my computer going this way. So if I had the real chart, it will continue to go this way, all the way up until it reverses. Okay? And that's when you get in as a buyer. You just get in and buy. Okay?
Okay. Bye.
Now, the next thing is a down trade. A down trade will move. Okay, right now I have it here, but basically it's from the top left of your computer headed towards the bottom right of your computer. Okay? And that is a down trade. Anytime you see a down trade, you're going to prepare to get in as a seller. Okay?
Okay.
Up trade buy, down trade sell. Up trade buy, down trade sell. Now, it's not just that easy as in, oh, it's an up trade I'll buy, it's a down trade I'll sell. There are other things you have to look for. So that's just one thing, and I'll get into that. That's just one confirmation that, oh, I need to get into this market as a buyer. But you need to find your entry points, and we'll talk about that. So I can look at that and I know, it's automatically going up. But just because it's going up doesn't mean I get in, because as you can see, it keeps pulling back. If it goes up, it pulls down. It goes up, it pulls down. Okay? The trade market, whether it's stocks or forex or any trade, the chart does not go up in a straight line, and it does not go down in a straight line. It's going to have those corrections and those pullbacks.
We only wish.
And yeah, I wish it went down or up in a straight line. That would be so good. So that's where you have to find, okay, if I want to buy, for example, let's say I'm on this trade here, It's going up, but if I want to jump in as a buyer, I can come in right here. Because guess where the market is going? Right here.
Yeah.
It's creating higher low. That means market is going down. Even though it's an overall, it's an uptrend. I do not want to jump in a market that is going down, because then I'm going to start in a negative. I don't want to start with a, technically you start in a negative because the broker has to pay $2 or $3 or whatever to pay their commission. But I don't want to lose in the market by jumping in when the market is pulling back. But I'll show you guys how that all works. So don't overthink that, right? But overall, you can see where it's going. You just need to find your entry. And you always want to enter right here at the bottom here.
Whoa.
You want to enter. If you catch it here, go here. Don't enter here because you don't know if it's going to go. Here, we say the 1, 2, 3. When it make this pullback, you want to jump in there because you don't want to go here and then it pulls down. Then you go negative, then you wait to go back positive, right?
It's magic number.
Okay, so the same thing with the downtrend. 1, 2, 3, jump in. And always jump in when it's in continuation mode. Okay, so that's the uptrend and the downtrend. And then we'll talk about how to find your entries later. And this is a range.
That's a real chart.
This is the range. You guys can see this. This is a market that was going up. You can see a trend here was going up. This is exactly how the market looked like. You see them candles, yeah? The market comes here and it decides we don't know whether we want to go up and we don't know whether we want to go down. The bulls here push the market up. I mean, the bulls push the market up, bears come in and push the market down. Bulls push the market up, bears push it down. So they're here fighting. They could fight here for a day, even for a week. Okay? The market could stay here for an entire day. But the good thing is, this is just one pair. If I find that one pair is consolidating, I just move on to the next pair and wait for this. And I'll let you know why you don't want to get in this type of market. Do not get in. You really don't want to, because when price leave here, when it finally breaks from a range, it shoots all the way up or it shoots all the way down. Now, if you...
The longer the consolidation, the bigger move you're going to get.
Yes. Thank you, Jasmine. See, that's why you're here. The longer the consolidation, the more the market stays in consolidation, the bigger the push is going to be when it gets out of that consolidation. And that's why you don't want to be in it. Because once you're here, nobody can tell you which direction the market is going to go, no matter how good we are. Okay? But I'll show you guys how to trap the market. Later on, we'll talk about how you trap the market. But when you're looking at something like this, with your bare eyes, just like that, you don't know where the bank is gonna, because you have to understand, you guys, we are what is called retail traders. Retail traders is what you hear on the TV talking about dumb money all the time. I hear that they call us dumb money, but that's what they refer to us, all right? The people who push the market are banks, hedge funds, who else? Governments, people who come in the market with millions and millions and billions of dollars. Me and you are coming in the market with $200, $300, $400. Some people come in the market with $50, $20, $100. Now imagine how much market can you move with $200 or $500? Nothing, yeah? So we wait for the banks to create the move for us, and then we just follow the trend. Yeah? Sure.
So like when you're in a range, let's say you're getting in on a buy, right?
Come this way.
Come this way. I can't really move.
All right, that's all right.
All right, that's okay. All right. So let's say you're getting in a buy, right? Let's say you're getting in a buy like right here because you're thinking, oh, the market is going up, right? And then it goes down, right? You're going to be stuck in a negative because the trade is going to push up and down and up and down, and you're not going to make any money whatsoever. You're going to be stuck in a negative.
You're going to be stuck in a negative. And more important is that not only are you going to be stuck, you could also be in a positive, actually. You could be either in a positive or negative, you don't even know. But no matter where you're going to be, the problem is when the range ends. Because we say the market will push all the way up or all the way down, you can lose a lot of money because how you know the market is going to go your direction. So that's why you don't want to get in a range. Let's go to the next slide. Oh, here is a good example.
Yeah.
Okay, this is blocking. I'm going to push that. Yeah. Okay, here is a good example of a market that just came out of a range. See here, market went down, market went up, price down, price up, down. You can see that's a range sideways. It's not trend going up or going down. But look what happened at the end of that consolidation. You guys see, it broke through. Look how quickly it pushed it down. This, if you are going up, if you enter this market as a buyer, you'll be losing a whole lot of money over here. Because now the market is going against you and it's definitely going to hit your stop loss. Now, when I say you're going to lose money, you don't lose a whole lot of money, because if you're smart, you're going to set up your risk. You have your risk management. You're going to set up your stop loss so that if the market goes against you, it hits your stop loss and you lose whatever $3, $4, $5, $10, whatever you set up as your stop loss. If you don't have a stop loss, then the market is just going to continue to take money from you, all right? Until it reverses or until it kicks you out of the market, all right? So avoid this. Avoid trading in a range. Where is, oh, here.
Yep.
Here. Oh, I wanted to actually show them here. You see here? This is a market that came out of a range and it shot all the way up. So if you are going down, again, you will lose money here because it went up. Okay, so let's see. Now, here is something else, price action confirmation. So now you know about the trend, down trend, up trend, sideways movements or consolidation or range, whichever name you want to use, it all means the same thing. So now you've gone in your chart and you have identified a trend. There's no consolidation, there's a trend. Now you want to mark your chart so that you can get in the market. Do not rely on just one factor to get into a trade. I didn't say that earlier. Don't just say, oh, it's an up trend and I see the candles are going up, I'm placing and buy, click buy. No, don't do that. You need at least 3 or more confirmations. Just having a trend is your first confirmation. Do you see a trend? Yes. Draw the trend line, which is what we were going to do today. Draw the trend line. I'll show you guys how to draw a trend line. That's one confirmation. The second confirmation, do you see areas of support and resistance? That, I blocked myself. Okay, move that. Do you see areas of support and resistance that have been touched at least 3 times? 3 times. Actually, 2 times is also good if an area of support has been hit 2 times, but 3 times is even better. Okay, if you see a support and resistance, draw your horizontal line. This is gonna be a whole bunch of stuff you did in kindergarten. Trust me, I'm like, why am I marking all these charts? If you have little kids, have them help you draw these charts. All right? Even she helps even draw my draw my lines. Okay, thread line.
Okay, so for what period of time are you looking to see whether there was support and resistance 3 times?
What period of time frame? Is that the question?
Yes, like what period of time would you look at to see whether there was support and resistance?
Usually I would say where if you're marking your chart on 4 hours, then it's 4 hours. If you're marking your chart on 1 hour, then it's 1 hour. If you're marking your chart on 15 minutes, then it's 15 minutes. In every time frame, you're gonna fight support and resistance. So
okay.
You just have to decide what type of a trader are you. If you're a long-term trader, swing trader they call them, then you'll be looking at daily, weekly. You guys are not gonna do that. So you and I will be looking at mostly mostly when you're starting, I'll say start with the 1 hour. All right, start the support and resistance. And when you practice on all time frame. Practice on 15 minutes, 1 hour, and 4 hours. I would say just practice on those 3 time frames. Okay, but every time frame has its own trend. As a matter of fact, you might get in a market and you look at weekly or daily, and it tells you the market is going up. But then when you narrow it down to 1 hour, it tells you the market is going down. Because that particular time, there are little movements. We saw the market move up and down. It creates waves, okay? So you might be trading 4 hours or 1 hour, but that period you're trading, the market is correcting or is pulling back. So you're gonna be on a downtrend, even though overall the market is a downtrend. Make sense?
Yeah.
When we get to the actual lines, you guys will see. So draw horizontal lines to mark your support and resistance. It's just lines or zones. You don't want to make a support and resistance as one line, one single line. It's an area, but I'll show you guys how to draw it. Wait for price to break out of support and resistance before you buy or sell. Okay. And by the way, support lines, resistance line are one and the same. When the market is pushing up, the line is called resistance. It meets the resistance. Just like in a house, you have a ceiling. The ceiling of your house is the resistance of the market. All right. The market goes up, then it hits that ceiling, which is a resistance. Then when it finally breaks that resistance, remember, anything that goes up must do what? Anything that goes up
Go down.
Exactly. Anything that goes up must come down. This trend that goes up eventually will come down. On its way down, the resistance that it met before now become a support, which is like your floor of your house. Okay? You think about you jump up. When you jump up, you land back on the floor. You don't go underneath the floor because the floor is holding you. When you jump up, you don't go above because there's a ceiling in your house. It's the same thing with the market. The market eventually hit the ceiling and it hit the floor. So on its way up, it's resistance. On its way down, the same resistance become support. All right? So wait for the price to break out of support and resistance before you buy or sell. Okay? So these are all confirmations to you guys. Like I showed you guys that up trend and down trend. And I said, just because the market is an up trend or a down trend, don't get in. This is where now you're narrowing down. Okay, I see as an up trend. Where do I enter so I make money? Where do I enter so I make most of the money from? That's when you start looking for this confirmation, trend, support, and resistance. Okay, I see it, but I cannot get in because I don't know what the price is going to do. I'm going to just sit. In fact, in Forex or in trading, we get paid to wait. Just to wait. You wait and see what the market is going to do. All right. Once it breaks those support and resistance, that's when you get in. But you also need to understand the candlestick pattern. To me, that is the third thing that I look for. So I look for the trend, support and resistance, which is also known as level. You hear people say levels, you hear people say structure, you hear people say support and it's all mean the same thing. All right. It's just an area where price got to in the past. And you can see what happened yesterday. You can see what happened last week. You can see what happened last month. You can see what happened 10 years ago. All right. These are just areas when you look at your chart back, the market got there and it could not break. It went down. It goes up. It got to that point. It goes back down. It's that easy. All right. So the last thing I look for as my third confirmation is candlestick pattern. Okay. The candlesticks pattern. Again, get your kit and print it out. Print it out so that you know this candlesticks pattern. I'm just going to discuss 3 because they are more popular, but there's a whole bunch of others that you guys can study on your own time. Okay. The engulfing candle, the doji, and the spinning tops. Those are the 3 I want to talk about. But there are others. Trust me, there are others. But these are all signs. So I don't want you guys to see an engulfing candle and say, it's an engulfing candle, so the market is going to change. No, it's not going to change unless you have other confirmation. Okay. Hold on. Okay, here are the candles. Let's push this thing. Oh, it was blocked. You know what? There you go. Okay, so you guys see this? I'll send you this. This is just something I got from Google, and these are all different patterns. But this is an engulfing candle and all these. These are just signs. When you spot them, that's why I told you guys, train your eyes to see. When you see this in a chart, the first thing that goes in my mind is, oh, I see a hammer, I see a doji, I see an engulfing candle. That's just one sign that this market could go down or this market could go up. So then I start looking for the other confirmations, right? I don't want to dwell on those, but I want to talk about this here because these are so important. This there.
Doesn't come up on our screen.
No, it don't come on their screen, but it's covering on my side.
Oh, okay.
All right, so this, you guys, this is an engulfing candle. All right, here is a good sign. Whenever you see an engulfing candle, this one here, if it's green, if the prior candle was a red candle, a small red candle, followed by a big green candle like this, that's called a bullish engulfing candle. All right, this one here. That is a sign market was coming down. Okay, you only see this when the market is coming down. Sorry.
Oh.
Market is coming down on a downtrend, okay? And then it hits the bottom, and you see this candle here. And then you see this other huge candle here. What an engulfing candle means is that this small candle here can fit inside the body of this big candle. That's all it means, all right? An engulfing candle is a sign, it's a reversal sign that this market that was going downtrend, you are all here making all this money, You want to know when to get out of the market, because you don't want to make all this money from up here to down here, and then you have to give it all back because you got caught up with the market, it reversed on you, and now it's started moving up and you're back to zero or you're even back to minus, right? So you want to know, when do I get out? When do I get out of this market? So if you see this sign here, this is a sign that the market is changing, accompanied with other things that we just talked about. Support, resistance. For example, if there's an area of support and resistance down here, because there are times you're going to see an engulfing candle and the market doesn't change. So that's why I say you can't just look at the engulfing candle by itself, okay? Make sure you have at least 3 things to confirm the market is about to go the other direction. So that candle has to fit in here, or even the previous 2 candles. Sometimes it's a huge engulfing candle that can fit 2 or 3 candles inside of its body, all right? So once you see that, you close your sale or whatever you are selling. Yeah, you'll be selling. You close your order, and either you get in a buy or you just call it a day, all right? Because you can close and get back in. You come down as a seller, you go up as a buyer, right? And this is the opposite. Let me move this. It's blocking. There. This is the opposite here. The market is trading up. You can see that green arrow. You're coming up on an uptrend, and boom, you have a small green candle and a huge engulfing red candle here. Just like this, the colors are different. That's a sign of reversal. That means this movement that was going up, it has reached the end. It's either going to pull back for a correction or it's going to completely reverse, all right? And you don't want to be caught up. You want to make sure that you save your money and you get out, all right? But the other things we'll discuss later. You don't always have to wait to get here to see this to get out. If you enter the market here, you can get out in the middle. Once you make your money, whatever your goal for the day is, don't stay in the market. Because unless you're watching the market, and most of you are at work, okay, during the market, unless you're sitting in front of your computer watching the market, it's very hard to just sit there waiting for an engulfing candle. You could be home and still not see that engulfing candle form. So the best thing is to set the market, set your take profit, set up your stop loss, and go to work, go to sleep, go to stock, go wherever, all right? Let the market do its thing and it will close you out and give you your profit, all right? But if you happen to be on the internet and you're watching it and you're still in the market, you see that form, take your money. Don't wait to go all the way down here. Take your money, all right? But when you're marking your chart, because you have to mark your chart to get in, look at stuff like this. If you see this, then you know what that means, right? Then the market pushes it down. Let's see, I want to move fast because I don't want to keep you guys too long. Okay, here is a good example. This is exactly how the candles look like. This is a downtrend. You can see downtrend move from the top left of the computer towards the top right. Goes down, reaches here. Let's say there was an area of support and resistance, and here you see engulfing candle. So you look at your chart and say, oops, I see support. Market touch 1, market touch before 2, market touch. This market is about to reverse, all right? Now you have an engulfing candle that has confirmed that. Your eyes can see the candle. Sometimes you see long wicks at the bottom of the candle, rejection wicks, meaning the sellers are exhausted. All right, they are no longer able to push the market down. So you see that little candle, close your order and get in. If you're marking a chart right now, and I find the chart right here, and I see this, then that's a confirmation. I need to get into a buy, all right? And here is the opposite. I need to move that. Hold on. Here is the opposite. You got your bearish engulfing candle. Market was going up, moving from the from the bottom left of your computer towards the top right, and you reach here, you see this red engulfing candle, and the market went down. That's how easy it is, you guys. It's not that complicated. What doesn't change? It does. I'm looking at spinning top and your computer says spinning top.
I know, but I'm saying this and that. It doesn't change size.
It's all right. That's only for me. That's only for my computer. So can you check to see what she's saying? Okay, here is another one, you guys. So we talked about
George Johnson, she's back on the webinar.
oh, she's back. Oh, she need me to approve her.
Mhm.
Hold on, you guys. Somebody will need to be approved. How do I do this? Okay. Okay. Tell her I approved her. Okay, there you go. All right, guys. So the next one is called spinning top. Spinning top. Spinning top candlesticks. All right. So spinning top is different from. There you go. Spinning top is different than engulfing candle. All right. Here is a bullish spinning top. Here is a bullish spinning top. Market come down, and then you see this particular candle here that has a body in the middle and little wicks at the top, both sides. Okay, not long wicks. They are not that big. Okay, it comes at the end of a downtrend here. That's a sign that market is about to reverse. Look for stuff like this plus other confirmation. So it's not an engulfing candle. This cannot fit in here like the candle we just looked at before, but this candle here is called spinning top and it's a sign of reversal. But don't just see the spinning top and, oh, it's staging. Sometimes you see a spinning top and the market continue to go down. If the other confirmations we talk about are not there. But in this case, spinning top, market reverse. Okay, the opposite happened here. Market is pushing up. You see a spinning top candle here, boom, market goes down. All right. Any question as far as the candle patterns, you guys? Unmute yourself and ask me before I go to the next slide. Nope. Dojis. Like dojis? Dojis. You guys, stuff like this, sometimes it's not even so important to know the names, okay? Yes, over time you'll know their names, but even if you don't know their names and you see something like this in your chart, that's another sign. It's another reversal sign. You'll see these signs at the top, you'll see them at the bottom when you're coming to the end of a trend. So if you see something like this, don't sit there and say, oh my gosh, is it a dragonfly? Is it a dragon doji? Is it long-legged? Is it gravestone doji? As long as you see it, it's just a sign the market is going to reverse, because it used to drive me crazy. I'm like, I'm looking at 20 different names. How in the world would I ever know which one is which one? But for me, it's just like I see it. I know it doesn't look like other candlesticks in the chart. It's a sign of reversal. Now let me look for my other confirmations that we just talked about, right? Those other dojis are, let's see. Oh, the M's and the W's.
Okay.
Hold on.
I like M's and W's.
The M's and the W, you guys, the market forms a whole bunch of M's. In fact, the entire move in the market is a bunch of M's and W's, okay? All A's and V's. So let's start with the M's and the W. You're gonna look at your chart and you're gonna see as it goes up and down, you're gonna see all of this. M's, you're gonna see W patterns, M patterns, all over the place. They're gonna be all over the place. So your job, when you see a name, which usually form most of the time at the top, you'll see it also as the market goes up, but every time you see a good M, you see it at the top. When you see an M like this, number one, when you spot it, it's not going to be a complete M. If you spot it when it's already done, it's kind of too late. You might be wanting to look for maybe go to the other direction. Usually you see this formation when it goes up, goes down, goes up, and now you're expecting this leg here. You see this arrow here? See the arrow? That's what you're expecting now to form to complete the M. Once you see the market pull down like this, again, remember what I told you? This money is made by just using your eyes to see the patterns in the market. They're all hidden there in front of you. The patterns are hidden right in front of your eyes. Once you see this M, wait for this move to happen. Once it gets here, you see where this M, I don't know, whatever you call this area here. Oh, it's not a crescent.
An arch?
Okay, whatever you call this area here, as soon as you see this, assume that this arrow is not here. This whole move is not here. You only have 1, 2, 3. Draw a line here. Draw a horizontal line here. Okay? Just push a line there and wait for the right side of the M to form. Once the market pushes it down and it crosses your line that you drew over here, that's a good M. And the way you know you want to get in the market right here, as soon as the market breaks through, the market will break through. It will come back and test that. Don't be scared if you break through and you see a green candle pushing up. That candle is going to come and test this line that you drew, and then it's going to put the market down. And you get in right here as a seller. Not at the top here, because you don't know if this market is going to push up and there is no M formation. And F formation is only going to be confirmed once it breaks this line here that you personally draw. The market doesn't draw it, it's not going to be there. You're going to be the one to just go in and take a horizontal line and click and draw it, and that's it. Okay? Once it breaks through, close, retest, take the sell, and take it all the way down. That's your money. All right? And then we'll talk about where do you put your take profit, where do you get out, and so forth. But that's where you want to jump in. Now, here is another tip. You see this arrow here? And that's why I like TradingView. All these tools, you don't have them with MetaTrader 4, but they're available in TradingView. All right? You take an arrow on TradingView. There's a feature that has an arrow. You drag it. You drop it here. You measure this. Measure the movement from the top of your M to the bottom here. Put that arrow there. You don't have to do anything other than 2 clicks. You pick the feature, you drop it there. The arrow is formed. All right? Then once you do that, you drag that line and put it at the bottom of your horizontal line here. This line here tells you that this market is going to go down just about the same movement. Okay? And sometimes it might be less, sometimes it will be more. But this line kind of give you a gauge where to put your take profit. And there are other things that you can look at, like structures, to decide where to take your profit. We'll talk about that later. But this line is a good gauge, all right? So if you don't want to wait until the end of the line, you can stop your market right around here or wherever you decide to put your take profit, all right? What is it?
Also, well, I noticed 2 things. Well, I'll say the first thing. I'll say it first. So also, if you have trouble seeing the candlesticks on, like, when you're looking at the chart, on TradingView, you're able to change the candlesticks to line, like to the line chart.
Oh, yes, yes, yes.
So it's
yes.
easier for you to see M's and W's.
Yes, yes, yes. I'm glad she said that. And hold on, you guys. No, hold on.
You just opened it.
Oh, by accident.
Go to Chrome.
Hold on, you guys. Uh-oh, somebody is locked out. If you guys got logged out and you get disconnected, you have to text me, because when I'm on a screen share, I cannot see. Tell her I will approve her. Okay, how do I do this now? If something happened and you get locked out or you get disconnected, just text me on my cell.
Yeah, she just texted me.
Okay, to let you back in. Okay, just tell her I let her back in. Okay, all right, there she is. All right, so.
If you want to go to TradingView.
What were you saying?
TradingView, line chart.
Oh, okay, yeah, we'll do that when we go to TradingView. Sometimes it's easier to see these patterns when you change from candlestick to line charts, and we'll do that when we go to TradingView, which is the reason we love TradingView. So that's your M. So don't forget, when you see the pattern, to draw the line and put the arrow there. That kind of give you a good gauge of how far the pull down or the move down is going to be. All right. Here is a W. We all know M's and W. This is just an opposite of this. You're going to see this from the bottom. Market is going to push down on a downtrend. It's going to pull back. Once you see this pullback happen, you draw your horizontal line there at the corner, or whatever you call this part of this W, okay? The peak, okay? You put your horizontal line there and you wait for this arrow here, or this side of the W, to push up, okay? You wait until this area is broken, okay? The market price push up. Once it crosses this line, that's the only time you get in as a buyer. Remember, here you got in as a seller, here you get in as a buyer, all right? And you do the same with the arrow. You pick the feature that has the arrow, put the arrow, and then there is your profit, big profit. All right.
I don't know if you noticed. I don't know. But the arrows, these arrows, the blue arrows, it's the same movement as like if you want to make a certain amount of money, it's a good way to like see how the trade is gonna go. Like you see the blue arrow and the M, how it went down, and then how when you see when you get in on the sell, that's where you want to close.
That's what I just said. That's what I say. That's what I say. Yeah, I said it.
Oh, okay.
You got it. You got it right. Yeah.
Okay.
So yes, Jasmine is just saying that the arrow, I think I told you guys, this arrow is a good measurement. It's your gauge. How far is the market gonna go once it breaks this? That's why you put it here. You copy and just paste it here. That's all you have to do. Copy, the arrow is there. You pick the arrow, you place it here. Then you copy. Is somebody logged in again? Logged out? No. I don't know what's going on. Okay. So, no, she's in. Okay. So there's your horizontal line. You copy the arrow, paste it there, put it there, or drag it there, whatever you want to do. And there is your gauge for your take profit. Once this, now, if this chart here gets here and reverses, there's no buy for you. Do not buy. You only buy if it breaks through. Okay. Any question as far as the M's and the W's? I want to make sure you guys understand so that when you start marking your charts, you're making the money. Hold on, let me move this. Keep moving. All right, so double bottom, double tops. This double bottom, you're gonna hear people, especially within IML, talking about double tops, double bottom, triple tops, triple bottom, and all that. All there is. Double bottom is your W that we just looked at. All right, here W. You have 1, 2. This is your double top. 1 double top, 2 double tops. Double bottom. Sorry. Okay. 1, 2. You're gonna see it in the market just like this, right? And if you hear double top, that's all they're talking about right here. It's an M. Okay. Is your top, first top, second top is basically the second formation. All right. And then neckline. Only you put the neckline, the market will form this shape here, but you put the neckline, and you don't put the neckline after the move has happened. It's too late for you. You put the neckline when you're marking your chart, all right? You decide what time you're gonna be marking your chart, at night, over the weekend. You can mark your charts at any time, lunchtime, whatever, all right? You put that neckline, and you say, I am not getting in this market until this neckline is broken, until my M crosses, breaks through, closes, test it, and go down. You come in as a seller. Okay? Any question as far as W's and the M's? You guys are good, or I'm totally confusing you? I don't want to be confusing them. Okay, this is how it will look on a chart. Yeah, wasn't this clear? This was all nice and good. They look at W and an M. It's not that clear on the chart, but it is clear if you train your eyes to see. Right? Look at this. Market pushed up, got here, stopped. Swing high. It's called swing high. That's your first stop. Market pushed down, go back up again. It's unable to break through these support and resistance. It create another, I wouldn't say swing high, because it could not create a new swing high. It stopped at the same place. Look, whether it's the body or the wick, market got there, stopped, market got there, stopped. There's your double top. All right? First top, second top. Your eyes can see this, all right? Your eyes can see that the market got there and was unable to break through. Your eyes can see market go there, unable to get through. These are good signs. You know where the market is going to go, all right? Here is another one. Buyers unable to push prices to a new high. Market goes up. There it is. Here it is. Market goes up again. There you are. So these things, you're going to see them in the chart all over the place. All over the place, right? Boom. You don't need to overthink it. Just look and say, oh, but if the market creates a new high, it pushes through this and goes up, then now you don't have a double top, okay? Alrighty, let's see. What is this? Yeah. Another type of chart.
Here is candles.
You can have your candles any color. Some are blue, you can do blue, you can do green, whatever color you want. Here is the chart. This is an actual chart. Market push down all the way, boom, and then it goes back up. Comes back down. Now it's your job to draw the W. You see this green? All you do is you pick your drawing feature and you draw. I see the market go down, it went up, it came down, it went up. That's it. Okay? And now you know, because I see the W, there is the first bottom, second bottom. All I have to do is put a neckline here, and then you can do it straight, you can do it like this. It doesn't matter how you draw your neckline, as long as it's broken. Okay? You can see market came here, broke that trend line, retest with this candle, and push the market all the way to Mars. Look how far it went. That's a lot of pips. Look at that. That's a lot of money, yeah. That's your breakout candle right here. You can see it broke through your line. It broke through your line, and now you can see market went all the way to the sky. This is a lot of moolah over here, okay? But you don't enter here. You wait for this to be broken. Okay. Triple top and triple bottoms. Again, remember what I told you guys? Everything you need to know about trading is sitting right in front of your eyes. It's sitting right there. Look at your chart. You see the M. Remember how I said you have to wait for your neckline to be broken? It's because of stuff like this. If you saw this M here, boom, boom, you go here, you go so excited. Oh, it's an M. I'm going to take a sell. Guess what happened? Market got there, push back up. It didn't go down to complete your M. It pushed back up for that time to form what we call a triple top, and it will push right back down. So you still will enter it. You just need to wait so that you don't enter here and then it pushes back. Now you are in a negative, you have to wait for it to come all the way down, then you are even here, then you start a new move here, right? Why do you want to be in a negative to go back to positive? What if it gets here and doesn't come down? Now you are really in red, yeah? So that's why you never get in the market until your neckline that you personally drew is broken. Okay? Once it's broken here, then you can get in as a seller. Okay? There is the W that forms triple what? Triple bottom. Okay? You see the W. Oh, I'm excited. It's a W. It's a W. Let me throw my trend line, my horizontal line here. And then the market gets here, and instead of pushing up to complete the it went right back down. Okay, now if I had entered here without waiting for the break, now as it goes down, I'm in red. Okay, I'm in negative, I'm in negative, I'm in negative. I will not get into positive until the market get back here. I don't want that to happen because I'm not even sure when it gets here, it will go back up. It's not a guarantee. There could be news, it could break and go down. Now I'm in red. I don't want that. So once you see that, if it's not broken, you wait, and then once it comes back, these are telltale signs that the market is going to do that, but the market is never 100% guaranteed. Anything can happen. Somebody can open their mouth and say something, and they take the market tanking or going all sorts of ways, okay? So just be careful. Once you get here and you break, you get in as a buyer, and you take the market all the way up, all the way up, all right? Any questions? Come on, unmute yourself. Don't be shy. You know, in IML, you guys don't ask questions. Now I'm here. So I don't want to confuse you. I know it's kind of confusing. When I first started looking at this stuff, I'm like, my head is just spinning. I have no idea what these people are talking about. I have no idea what these people are talking about. So,
well, it looks easy enough, like when you're showing it like this, but then when it's actually on, you know, like on live stuff, it's not so easy to see.
Actually, once you train your eyes, that's why what I'm doing is when I show you guys like this, the triple top, the triple bottom, I show you the pattern. I also do it on the chart because this is easy, like you're saying. It's very, oh, that's a name. Okay, it's a triple top. Da, da, da. And then you get to your chart and you have all these kind of, what? Where are they? So that's why you go, you train your eyes to see. And you understand that the first thing you want to do is, once you have your support and resistance cleared, everything else becomes easy. Because all the market was down. You can clearly see the market is falling down, yeah? But look,
yes,
the market go here and it stopped, yeah?
Right.
The price push up, yeah? And guess what happened? It got there and it stopped. It pushed right back down. Did it go below? Did it break through your line here? No, it didn't even get to it. Look, it got here, it stopped, because this is an entire zone. Push the price back up, went back down. Did it break through here? Did it go further bottom? No. So you got your 1, your 2, and your 3. Your triple bottom. Market is getting to the same place and is stopping. This is a strong support here. Market try to push through, and basically what it is, these are bears, these are sellers trying to push the market down. Then the bulls come in and they say, no, we're gonna push it up. But the bulls have not enough strength to pull the market down. So the bears come back, and remember, the market, the stock market, the forex, it's a fight. It's always a fight between sellers and buyers. Whoever has more is the one that dominates the market. So over here, you can see it's almost a red. Look here, there's no thread here. This is a thread, and this one here is a thread. Here is consolidation. That's all this is. Even though you see this up and down, market is just going sideways. It's not pushing up, it's not pushing. And over here, you are just waiting. You're just waiting. But as you see this form, you're like, oh, there's a support and resistance here. Oh, look at this. This is touch 1, touch 2, touch 3. Oh, wait a minute. Do I see a hammer candle? There is a hammer candle. What does that represent?
A hammer candle?
A hammer candle is a sign of reversal. Exactly, reversal. Go down, come down here. You see it again. It come back here. You might even see an engulfing candle. In this case, we don't have an engulfing candle. This is actually an engulfing candle here, but the market didn't go further down. So these are your telltale sign. And then what I do is, once I identify this area as a consolidation area, I'll put a horizontal line here and a line here, and I'll wait for the market to break through. I don't get in here. When I see this green candle, even though my bias at this point is that the market is going to go up, because I see those triple bottom or double bottom. I see these little candles here. But because I'm not sure, I'm just going to wait until the market breaks through this line and closes. Not just close, not with a wick. You don't want it to close and it breaks with something like this. I want to see a body. Okay, if this was a 1 hour chart or 15 minutes chart, I want to see a candle that closed and the body is above this line. Now I am immediately jumping in as a buyer. Immediately I'm clicking, click, buy. All right, but you have to train your eyes to see. Okay, all this is a W here. If I was able to draw from here, I would go like this, I'll go like this, I'll go like this, I'll go like this, but then it came back down. Okay, basically what you're looking at is very much similar to this. Okay, this one here. All right, and the M's. Okay, are you guys good? Are you guys good up to here? Triple bottom, double bottom. You good?
Yeah.
You're
Okay.
explaining it really well.
Yay! I'm excited. Okay, so let's go to the next pattern. Do you guys see that everything you need to make money in trading is in front of your eyes? Train your eyes to see. Get your kindergartner, get your nieces, get your nephews. My daughter, she points these patterns before I see them sometimes. Right? Once you tell them, I need to find a W here. I need to find an M. I need an A. I need a V. Where are they? I need to see this. They will show you where they are before your eyes can spot them. But all you have to do is practice to see them on the chart. The more you look at a chart, the more you practice how to mark your chart, the easier it will get. At the beginning, it might be a little bit foggy. You know, you are new, you don't know what you're doing, but it gets easier. I promise you guys, it gets easier. So the next one is what we call head and shoulders. Head and shoulders, inverted head and shoulders. All you have to do to identify these patterns is look for an A. This is an A, even though there is not that little line that you put on the A. But when you see a chart that looks something like this, it goes up, pull down, pull all the way up, create a swing high, come back down, then come back up, then go down. All right? And it look like, if you look at this here, don't you see that this look like an A over here? It look like an inverted V. Maybe it's a V that is upside down, but it's also like an A without that line. When you see this pattern, you draw the line, the same neckline, you draw it right here, right here. We call this head and shoulder. We say this is the left shoulder and this is your right shoulder. The head is all the way up here by itself. That's all you need to see. Okay. No. This is all you need to see in the market. The head that is all the way up by itself, and a shoulder on the left and a shoulder on the right. You draw a neckline here and you wait for the market to come back here and complete the right shoulder. And once you get here, break and cross, boom, you get in as a seller. That's all there is. See, all these patterns are there. You might see a W and an M and a head and shoulder. You're like, oh, I see a whole lot of patterns, okay? The next one is what we call inverted head and shoulders. Okay? An inverted head and shoulders, all it does is it's the opposite of this. The market went down all the way and created a swing low, and the market.
I didn't realize that would be your swing
Yes,
low.
that's your swing low, and then it goes all the way back up and create this pattern here. That's your left shoulder. That's your right shoulder. Draw your neckline right here and wait for this side of your shoulder to complete, break through and close and retest and take a buy. Here you take a sell. Here you take a buy. Now we're going to look at this with a chart because this looks nice and neat and clean.
That's the fun part.
That's the fun part.
Mhm.
All right?
Liz,
Yes.
Liz,
Yes.
on that, on the either one, how far down are you going to think like when you buy here or you sell here rather,
Mhm.
how far down is it expected to go?
You see, I'm going to ask because I forgot to talk about these arrows. You see, you take your arrow from trading view. There's an arrow feature, just like we use with the M's and W, and you measure the head. Always measure the head. You
Oh, okay. Okay. Measure there.
by the head.
And that's how, and,
Yes, and all the
and
way
you're gonna,
all the way to your horizontal line here. And then you take that arrow and put it, I don't know why this is up here. You put the arrow here from your entry, and that gives you, this should go all the way down here. That again, I won't say the market will go to the bottom of your arrow, but that gives you a gauge of how far. The market could go way, 2-3 times that arrow, but it gives you some good pips. You can go 50 pips, 60 pips, 100 pips, 200 pips, but that arrow will guide you. At least the market will go the same distance as your head here, the size from here
okay.
to here, and then you can take your setup, take profit there, or you can do a little bit further up. Okay, the same thing here. You do the arrow.
Like, could you do the shoulder? Like, if you're more risk averse,
Say that again.
could you do the shoulder, like the same length of the shoulder? Like, if you're feeling like, oh, I don't know about the head.
Can you measure the shoulder?
Right.
I guess you could, but you'll be limiting yourself because the shoulder distance is very small. But if you want to be conservative and you want to just be careful, yeah, because this distance from here to here is almost half of this. So you will still catch some pips from here to here. If you make money, you're just not going to make as much money as this. But if you want to just be sure, you're like, I'm happy with $20. I'm not trying to make $100, or I'm happy with 50 pips, or I'm happy with 10 pips instead of 20. Yeah, you can do that. So you can measure here and then put it here, and whatever that is where you take your profit. Because definitely this is way
Okay.
and you can be sure to get it with that. You can be sure to get it, right? The same with this. Okay. Is that clear?
Okay.
Yes.
Yes.
That's very clear. Thank you.
Okay, we are almost done here. But I wanted to make sure you guys get it. Okay, so this is it. This is the head and shoulders on a real chart. Remember how Ingrid was saying it looked clean and easy to see, but you come on the chart. Again, you see the up trend. Market is moving up there. Oops, it goes down. That's your left shoulder right there, right here. It goes back up. The head is always by itself at the top. When you see a move like this and another move like this, then there you know that that's the shoulder, that's the head, and now you wait for your right shoulder to form. Okay, you don't get in until you have a right shoulder. You draw your neckline and you wait for the market to come and break that neckline, and sometimes it will come back and test it, and then you can take the market down. So this is how it can look like on a chart. And there's a drawing tool, you guys, on TradingView that make this all easy. Because you can easily put it there and it will draw the head and shoulder for you. Okay? So I'll show you guys, yeah?
I see an inverted head and shoulders. I actually see 2 on the chart.
By the way, yeah, that's right. Sometimes you will see a whole bunch of head and shoulders within each other. You will see a small head and shoulder inside, a bigger head and shoulder inside. I actually had a trade like that 2 days ago, right? But we'll talk about that in trading. Okay, there it is. Oh, this one here, this is how you see it when you're drawing your chart. You see something that look like this, all right? And you draw this line, you say, I don't get in until this line is broken. You see that this candle? You see this candle here? Can you say it broke through this neckline?
Mm-hmm.
Why?
Mm-hmm.
No, it did not.
The whole body isn't over, just the wick.
Exactly. It's only the wick that broke through. You do not want to get in with the wick. You want to see this part of the candle, the body part. You want this body kind of like a little bit, but I want to see it close right here. I don't want to go in with a wick. Because a wick is a wick.
Through.
All right? The same thing with this. You can see all these are wick. You want to see a real body close. It doesn't have to be the entire candle, but if this body came up to here, you go to go. All right? And most of the time you want to wait for a retest. The best price action or the best way you can get in is when it breaks through, bring a green candle, test that with a wick or the body and come back down. All right? That is almost 100% guaranteed. All right? Now here it is. Look at this. Look at that. Now it
wow.
You can see it broke through, okay? And then you take the market down and you measure, you take your arrow, you measure the distance from here to here. It's the same one here. Boom. You take the market all the way down. You take your profit here. Or if you are home, you're not working, you move your stop loss to here and you keep trailing it. There's a way you can trail your market all the way to the moon. But that requires you to be in front of your computer. Every few minutes you look, if the price goes, you move your stop loss. You keep trailing it. But when you have to sleep, you have to go to work, you have to go to church, you have to do other things, you're not going to be able to just set it up, forget about it, tell the market, I want to take my profit here. I don't care whether it goes to the moon or somewhere else. I just want my pips here. 50 pips and I'm happy. I don't care whether it goes up 1,000 or down 1,000 pips. Okay, there it is, an inverted head and shoulder. This is the opposite now. Market goes down, pulls back, goes back down, and it creates, what is this?
That's a head.
Oh, no. It's my, this thing here. All right, I don't know if you guys can see. Market, oh, there it is. Market goes down, the head is always by itself at the bottom. Okay, you can draw this with a drawing feature inside TradingView and you can easily see that there is your left shoulder, but it's inverted. There is your shoulder, it's upside down. There is your right shoulder, it's upside down. You draw your thread line or neckline, not thread, but neckline over here and you wait for it to be broken. Did any of this break the neckline?
No.
No, because these are wicks. They are called fake outs. Because this is what you guys have to understand. When you're looking at this, if you're looking at a live chart, this candle was once, what color? Green candle, all the way up here. Okay? And a lot of people who don't know this, they got faked out because they say, oh, it's a green candle. It just broke my neckline. Oh my gosh. Let's say you're in a 15-minute chart or 1 hour chart, and then you don't wait for the 1 hour to be over. You dump it. Guess what? This market could just reverse on you and go, oh, there she is. Oh, this market could reverse on you and go, what she said? This market could reverse on you and go back. And now you're stuck here because you saw this green candle, because you saw the green candle here. And then the last 5 minutes of the hour, the candle pushed all the way back. And now you're sitting there looking at a doji, looking at a red candle, and you wanted to go up. She's locked out. I don't see her requesting to get in. Tell her to request again. Okay. All right. So you wait for it to close, to break and close with the body. The body, it doesn't have to be the entire body, but part of this body, need to go up here. So let's go on to the next slide. There it is. You guys see it? It's the same chart, but this time, look what happened. Oh, a green candle broke through. You see it? This is a candle that broke through and closed. Now, if you're on 1 hour or 4 hours, you can go down to 15 minutes time frame to see the retest, because sometimes you don't even see the retest here. But because this candle here takes 1 hour to form, or 4 hours, or even a day, depending on your trading time frame. If you're trading 1 hour, it will take 1 full hour for the one candle to form. If you're trading 15 minutes, it takes 15 minutes for one to form, 5 minutes for 1 minute, time frame. So sometimes what I do, this one candle here, let's say you are on a 1 hour or 4 hours, inside this candle is a whole bunch of other candles when you go to the lower time frame. Okay, because 1 hour has how many 15 minutes candles? 4. Is it 4? Yeah, it has 4 15 minutes candles. So I go to the 15 minutes to see whether one of those 15 minutes candles came back, tested, and then pushed up. All right? Am I confusing you, or did you guys understand what I say? Going back to a lower time frame. Yeah, tell her to send a request.
Hey, could you say that again?
When you are on a 1 hour candle time frame, or 4 hour time frame, or 1 day, or one whatever. So let's just stick with the 1 hour or 4 hours, because that's what you guys are gonna be doing. This candle here takes 1 hour to form. Okay? But at the same time, if you go to our time frame and you go to 15 minutes, this same candle here is gonna be a combination of 4 other candles that were 15 minutes each. Yeah. And if you go to 1 minute, you go to 1 minute. How many minutes make 60 minutes? How many minutes makes 1 hour? 60 minutes. How many minutes makes 1 hour?
60.
60. So within this candle, on a lower
60.
time of 1 minute, there's 60 other candles. They're gonna be green, red, whatever. The majority of them are gonna be green. Okay? That's how we ended up with a green candle. But they are gonna be a combination of red and green candles that form this. Now, if you wanna go to 30 minutes, how many 30 minutes makes 1 hour? 2. 30 minutes. So if you go to the 30 minutes time frame, you're gonna see 2 candles. It might be a red and a green, but the green is bigger, or it might be just 2 green candles that form this. So that's what I'm saying, that when this breaks, my eyes might say, oh, it broke, but now I need to wait for it to retest this line to make sure that this is a strong line. I just go to a lower time frame, like 15, and see whether any of the 15 minutes or 5 minutes candle came back and tested this line. Because I like it, personally, I like it when this line has been tested. It goes up, it comes back, catch it, then goes back up. Now, there are people who just trade breakout. As long as it breaks out, they just get in and go. But if you want to be almost 100% sure, then wait for it to break, check for it to test, go up, come down, and then go up. But when it comes down, it can't go all the way down here. It has to come down to the line and go up, or maybe just break through a little bit and then go back up. All right? Is that clear?
Yes.
Yes.
Yes. Okay.
Very good information.
Thank you. I'm
Yes.
glad you guys are getting it. I am glad. Hold on. I have to keep moving my Zoom. You guys may not see, but it's blocking my screen. All right. So when you start marking your chart, this is just a summary of what we just did. She asked to get back in?
She said that she had tested it, but it's not.
I don't see her.
I said to try again.
Okay. All right. So master chart price action, which is what we've just been doing the last almost 2 hours. Mark chart on TradingView. Practice on TradingView is better than MetaTrader 4. Save your chart. I'll show you guys how to do all that. Enter buy or sell position on MetaTrader 4 on your computer or your phone. It takes less than a minute to enter a trade. It takes a few seconds to enter a trade on your phone or on your computer. Use demo over and 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 over until you know what you're doing. All right, stay in your demo account. Don't be in a rush. I know we want to make money, but trust me, I stayed in my demo for 3 months and I still use demo sometimes today. If I have a new way or I see something new and I want to practice, I don't practice on my live account. I go back to my demo account and I enter there. Then I'm confident. Then I can go back to my live account. And that brings me to the end. But I want to show you guys a chart. I know it's getting late. I want to show you guys just one chart. So you see how the chart look like on TradingView. And then maybe next week, if you guys want to do this every Thursday, every other Thursday, it's totally up to you. I am available. I want the best for you. I can come here and answer your questions that you may not be able to answer on IML, because sometimes you're watching a video, but there's no live person there to answer your question unless you go to the IML TV. Okay? And even on IML TV, there's so many people. Sometimes you put a question and they don't see it. Did she send a request? Nope. There's only 5 people here. 1, 2, 3, 4, 5.
Liz, did you happen to record the session?
Yes, I hope it is recording. I did.
I do see a red dot. So I missed part of it.
All right, perfect. All right, so once it is, I will send you. So do you guys have any question before I pull up a chart? You guys have any question as far as the stuff we talked about, price action? Does it make it much easier for you guys to go to a chart even though you still don't know all of this now, know what you're looking for? It's not just a chart. You at least know before I get in a trade, I know what exactly I'm looking for. Confirmations and all that stuff. You can unmute yourself. You guys are muted. So if you're answering, I don't hear you. Nobody's saying anything. You guys don't know? Oh my gosh.
We can show
I did
them.
such a bad
That's easier now.
Oh no, that's the
That was
W.
easier now.
Okay.
Because I was like, I wasn't seeing all of this stuff.
Right.
Okay, good. I want to make sure. I'm like, I hope I didn't lose you guys. Okay, so let's look at
Oh, you know what? We
What?
can show them head and shoulders or triple tops or double bottoms on the
okay, how do I get out of here?
press
Exit.
and go to trading.
God, chef. Oh my gosh, this is
You
my
might
chart.
want to remove the.
This is my chart.
You might want to
Let's see.
remove the indicators and the zones. Do you still need the zones anymore?
You see, you guys, this is actually, I'm going to delete
In the
this,
itchy mode.
but this is a chart that I marked. How long ago did I mark this? Oh, last 5, about 2 weeks ago, and I made some money on it, but then I stopped. You can see, you guys are pushing my trend line. I'm doing all these things. So what I'm going to do, I'm going to delete it so that we can mark it all together. But you can see, you guys, when I mark my chart, I know where to take my profit. I have TP1. I have the first area where I can take profit, the second, sometimes the third, and the fourth. All right. So I am going to delete it so we can start afresh. Delete. There you go. See how TradingView is easy to use.
Inverted.
So when you first go on TradingView, this is TradingView.
Mm-hmm.
You pick a pair. It will be something like this. It will be looking like this.
Not yet.
This is my TradingView. You go to tradingview.com. I'll send an email with all the links. Everything I talked about tonight, I'll send you guys a link. But it's easy to see. I think, Cora, you already have this. That's how it looked like. So if you're doing this for the first time, ask her if she has to. She has to text me when she requests to get in because I can't see what I'm at. Right? So when you go to TradingView, and also on TradingView, there is all sorts of things, stocks, SP 500, Dow Jones. You've got to know what you're looking for. You're looking for Forex, okay? Forex. So you come over here, and you know, the first thing you need to know is the pairs of Forex, okay? If you don't know the pairs that we trade in Forex, tell me, and I'll send you like an image or a picture that shows all the pairs. So I can come here and say, let's say Euro, I can come here and say Euro USD, something like that. And all I have to do is pick Euro USD here, not a whole bunch of stuff I don't understand. Usually I use Forex or under FXEM, this top one here, forex.com is fine. Any of this top here you can pick, right? Euro USD, pick a pair, because you're trading Forex. And here there's all sorts of things. Stocks, things I don't understand how they work, okay? There it is. And then what you do? What happened? What did I do? Oh, chart. Full featured chart. It's all right. Full featured chart. And sorry, my computer is slow. There it is. Okay, that is your Euro USD. There is your Euro USD chart. Euro versus US dollar. Okay. Now, what did I say? Your first thing is when you open a chart. What do you need to do first? Access in order and you
60 time frame?
It's the market.
Look to see if the market's going up or down.
Yes, the first thing you need to see is the trend. But when I open this market, I open the market on 1 hour. It says 6 minutes. Okay, right here it's 1 hour. This one I put in there. But when you open your chart, this is not gonna be there. I'll show you guys another time how to customize your template. But I opened that chart on 1 hour. So to look for the trend where? Where do you look for the trend?
Then look for a month.
Yes, you go to the higher time frame and you start there. So I see this trend for me when I look at it, and I know for you guys right now looking at it on 60 minutes, where is the market going? Overall, not just this 1 hour we are in, but overall, looking at this chart, where do you think it's going? Remember when I said from one side of your computer to another, where do you guys think this market is going?
Going down.
It's
Downtrend.
Exactly. It's moving from the top left of your computer to the top bottom, to the top right. What is it? Top left, top.
The bottom right.
Okay, I can't say this. Top left, bottom right.
Top left to bottom right.
Yes, that's where the market is. So you can clearly see that it's a downtrend. All right. But if you go up here, what do you see, you guys?
Right.
What do you see now? Hold on. You have some place to zoom in. So you can, is it zoom in or zoom out? Zoom out. All right. What do you guys see? Look at that chart. Let me.
This is sideways.
Yes. Yay! There you go. When you see the sideways, you grab your line here. What I'll do is I'll come here. I'll pick my horizontal line. I'm like, market go here. It go here, and it stopped. I'll pick another line here. I'll say, look at that. Oh my gosh, look at that.
That's perfect.
That gives you the clue, yeah? You're like, if I'm not in this market, let's just say, I'm gonna show you guys something. And if you guys is getting late for you and you have to go, I totally understand. But I would want you to sacrifice and stay here with me so you get this, so you make money. For short-term sacrifice for a long-term gain. Okay, so what I want to do is do something we call playback. This is why you guys should use
what?
Playback. See, I cut the market. You don't
okay.
You don't see this side that was there before, yeah? So let's say, Ingrid, you decide, it's Wednesday night or Thursday or Monday night, I need to mark some charts because I'm going to be at work tomorrow, or I need to go to bed and I need to enter a trade. You open Euro USD, random pair, and this is what you're looking at. You're saying, okay, let's say we need to analyze the market from higher time frame to lower time frame. The first thing you do is you go to your month. Even though you're going to be trading only 15 minutes or 1 hour, you go to month to see where you are in the market. Okay, you go to the month and you are like, whoa, okay, look at this. From February of 2018, what has the market been doing?
Going down.
It's been going down, you guys. Look at this. Oh, wow. from February. But guess what? Even though it's been going down, there's been a lot of up move for retail traders like that. This is what the banks are trading because they got enough money to hold trade for months and years. We don't have that type of money. Look, market came from 2017 all the way to January 2018. Market was going up. But now we know on a month, market is going down. What about the month we are in right now, August? What do you see the market is doing? Each candle represents 1 month. Where do you think August is? August of 2019. You guys don't know where August of 2019 is? Remember, each candle represents 1 month. Jasmine, you know?
Yes, I know.
Where?
It would be at the most recent candle.
The most recent candle is the month that you're in. So this little tiny green candle represents August of 2019. This here was last month, July. Just like the hourly candle, whichever hour you are in, if you are on 60 minutes, this candle here will be within, what time is it? 11 o'clock candle. So this is August. Here is the deal. Today is August what? August 20, whatever date it is, 22nd. You don't even know by the end of August 31st whether this candle will be green or whether it will be red. But right now, what we see is green. I just want to know. Right now, we are in the green, but we don't know where it's going to be. But overall, the last 1 year plus, this market has been going down. Okay, so I get that. I am not interested in the month, but I have an idea where we are in the market, what the market is doing. And I go to the week, which is just this week that started on Sunday. Remember, Forex market start on Sunday, all right? Sunday at 5 o'clock, our time, Eastern time. Whatever time frame, if you're on Central time, then that's about 4 o'clock, all right? So this is the week. So this is the candle that started last Sunday at 5 o'clock, and it will not end until Friday, 5 o'clock, when New York closes the market. Market open in New Zealand, Sunday, 5 o'clock, which is 8 a.m. their time, and it closes in New York, Friday, 5 o'clock. All right, there's no trading on Saturday. All right, so that's the week. I look at the week and I'm like, where's the market going on the week? It came down. There's a reversal candle there. Market went up with a green candle and look like an engulfing candle. Okay, and I see this red candle. I'm like, okay, right now the market is going up, but I don't know but it's hard to tell. Okay, but I have an idea where I am in the market because I don't know whether in the next. Oh wait, tomorrow is Friday. I don't know where this candle is gonna end up by tomorrow. Okay, it might end up green. This could twist. I mean, the market could tank tomorrow and go the other side or go up or things changes. I don't know. Euro might come up with news and say something. Okay, so we don't know. All right, you could also end up with a doji, an indication that is just a weak bottom and top, and a tiny body in the middle or no body in the middle. All right, so then you go to daily, which is today. A daily candle starts at 5 p.m. the previous day, and it closes the next day 5 p.m. Whoa, look at that. What do you guys see? When you open this market on a daily chart, what do you guys see? The first thing you notice?
Like it's consolidating.
Consolidation. Yes, consolidation. Do you jump in a market like this that is consolidating? No, because you have no clue whether the market is going to go up, whether it's going to go down. Next week, if we do this, I'll show you guys how to trap the market so that even if it's consolidating, you can still take it up and you can take it down, but never enter in a consolidation. We talked about that. See, look at all these weeks. Rejection, 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 rejection at the bottom, rejection at the top. Market. I don't care about this candle. Don't let it fool you. That, oh, I see a big red candle. This candle doesn't complete until tomorrow, 5 o'clock. In the morning. But no, not in the morning. Tomorrow night. We are on the daily. It's 24 hours. Tomorrow evening, by the time you guys leave work, that's when this candle will complete. All right? And you don't know what news is going to come at night, tomorrow morning, all day tomorrow. It could end up a green candle, it could end up a doji, or it could be a solid, nice red candle, or we could continue to consolidate. It could end up just like these candles here. And then we're in consolidation, all right? So we move on to the 4 hours. This is now the area where you really, really want to pay attention. I personally mark my lines on 4 hours or 1 hour. It really doesn't matter. I think I'm going to do 1 hour so that you guys can see.
Not by price, but over here.
Head and shoulder? Where? Oh, yeah, right here there's a head and shoulder. See, Jasmine can fold them. Left shoulder, head, and then right shoulder. Guess where the market went? Boom, boom, boom. Market went down. So, you see?
You should draw.
Where is that?
I'm going to draw it out. See? Hold on. Let me zoom it. This is fun. It's all about training your eyes. All right? You come here on Trading View. All right? You look at the chart. Jasmine quickly say there is a head and shoulder. All I have to do is click, take my icon here, and try to plot it. Okay, you see a head and shoulder. Okay, let's see. Okay, here, boom. There is the head. Head is always by itself, all the way up or all the way down. Okay, it draws the neckline for me.
Oh, okay. Okay.
Oh, I got a head and shoulder now. Now what do? Now I just need to sit and wait because we get paid to wait.
Wait, can you
hold on?
Measure?
Hold on, Jasmine. Hold on. Okay, you guys, with the head and shoulder, what else do we need to do? I put in a line there. Remember, these are all the line I told you. See, it doesn't take long. So what else do I need to do? Measure what? Come on, Ingrid, you asked me that?
The head?
Yes.
From the neck,
Yes.
neck to
From
the
the head to the neck and up, going the other way.
Yes, you pick the arrow here, it's already there, and you measure from the swing high, the top of your head, you bring the arrow to the neckline, okay? Then you take that arrow, you can either duplicate it or you can just drag it. Do not extend it, and you move it right to the neckline.
Wow, that's
Wow.
Okay, how easy is that?
Wow, yeah.
Okay.
Now, let's go to your trend line at the bottom of your neck and shoulders and all that. What did the market do? Market came, broke through, and there it is. Now you can see the market pushed where? All the way to Antarctica.
all the way down.
Market went to South Pole. Oh my gosh, let's measure these pips. This is money, you guys. This is some money.
Now, this is on 4 hours, so you have to wait. Now, if you had gone through a time frame, you would have seen a lot of pullbacks.
Yes.
And this is going to be slow. Each candle is 4 hours, so that's.
But this is going to be slow. But if they're going to bed right now,
that's a whole day.
If they're going to bed and they enter the market here, set up, you have this guide here, you come in here and you measure this here, okay? And look at that. That's about 66 feet, okay? Up to the end of the arrow. But look what the market did. Market went down, okay? All the way to 115 feet, okay? See that? And then after consolidation, after that consolidation, what did the market do? It went down further, 191 feet, okay? Now, let's talk about pips.
Wow.
When we measure pips, that's why I tell people, don't ask somebody how much money they are making in Forex. Because we all 5 of us could enter in this trade. But we enter at the same place, we come out at the same place. Let's say we all come out here or here. But we all gonna make different amount of money. Same trade, same entry, same exit. Because the amount of money I'm going to put in the market is different than the amount of money you decide. I might decide to trade 10 cents. You might decide to trade 50 cents. She might decide to trade $1. Another one might decide to trade $5. So all you have to do is take these pips, you take the measurement. That's why we love Trading View, because that's how you can do all this stuff. Some of it you can do on MetaTrader, but some of it you can't. Okay, you measure. Let's say we go up to here, and it's 112 pips. Now, if you're trading $1, you multiply that by 112. How much is that? $112. Okay, and a trade you set up and you leave it by itself, whether it takes 2 days or 3 days, only up to the trade. But if you're trading $1, that's 112. If you're trading 50 cents, how much is that? That's half of 112. Whatever half of 112 is.
52.
56.
52, 56,
56.
whatever. 56. Exactly. What if you
56.
what if you're trading 10 cents?
It'll be
Oh, man.
$5. $5.20.
Why?
How did you do that?
$11.12. I don't know. $11.20.
Yes, if you're trading 10 cents.
Just move the
So you
decimal.
see what I'm saying? So let's say, oh, here she is. Wait. You see? Okay. So isn't this a good stuff, you guys? Do you like this?
I love it.
So let's say I get.
Now I'm ready.
Yes.
I
Ready
get.
to make.
Say that again, Paul. What do you say? What do you?
I'm ready to make some money.
Okay, good. So if I'm trading 10 cents, let's say Jasmine this cycle, she don't need a lot of money. She's a
I need
student.
50 cents.
That's what she does when she has to go to school and she need money.
Remember that
She just need a little change. So Jasmine, I'm gonna only let her trade 10 cents. Okay? How much money would she make by the time she reaches here at the end of the arrow? Hold on, let's start again. Here, amen. Measure your pips from here to here. That's what, 65. So Jasmine will come out of that trade with $6.50. So she was only 10 cents. Yeah. Get it? Which is 0.01. 0.01 is not 1 cent. I didn't know that when I first started. I thought, oh my gosh, that's 1 cent. No, there's nothing like 1 cent or 2 cents or market start at 10 cents. That's the least you can trade. So Jasmine will make $6.50. What about, let's say, Ingrid decide to trade 50 cents? How much money is she gonna make? That's going to be 65 pips multiplied by 0.50. How much is that? $32.50.
Liz, doesn't it also depend on the spread? So that would be how much theoretically the person would make without the.
Oh yeah, the spread come out.
Okay.
Because the spread will come as soon as you get in the market. You always start at -2, -3, -4. The broker get paid there. Once you start now counting your real pips, if your real pips, if my goal is to bring home 65 pips, that's mine. The broker is already paid, all right? Because no matter how good the trade is, the minute you jump in, they always start at negative because you're paying the broker their money. They want to get paid. The broker makes money whether you lose or win a trade. It doesn't matter whether you win or you lose. They still get paid, okay? They get paid as soon as you jump in, all right? So that will be $32.80. That is somebody who is trading 50 cents. Yes. What if I decide to trade $1? I make $65, yeah?
Right.
What if I was trading $2?
$10, $650.
$10, $650. $100, $6,500. But you don't want to go that route. I know it's much attractive to say, whoa, $100 and I can make $6,500. Now, listen, the problem with that is you don't have an account. Well, this is very achievable. This can be achieved like within 2 days. You can make that $6,500. The problem you're gonna run into, the money that you put in your account, your little $200 or little $300 or little $100, is not enough to allow this market to keep going up and down. Up right now, you guys just see nice red candles. Oh my gosh, those red candles are so cute. Oh my gosh, let's mark it until you go down to 1 hour. Remember how I told you to break the market down? Now you go to 1 hour. My gosh, I'm about to make $6,500, and I only have $200 with my broker. So let's see. Now I go. Where were we? Zoom out. Where were we?
That's my head and shoulders.
There it is. Okay. Remember, we entered the market here. Actually, this was a good market. This wasn't so bad. Actually, this was it. See, you can be lucky. This market did not have a lot of pullbacks. This, and again, you don't know. This market actually, because these green little tiny candles. Hold on. Oh wow, this is so cool. See, that's why you have to mark your chart. You see this tiny, this red, these green candles, these are pullbacks. Okay, this is market going against you. You're going down, but the market goes up. They go down, goes up. Now, if the market pushes back, huge movement like this, okay, 83 pips against you. Now, even though you are going for your little $6,500, does your little $200 account enable the market to push this back? You are here, you are trading $10. The market has gone against you 86 pips. What is 86 times $10? 860. Now your account is supposed to be like minus 860.
Oh, that's bad.
You see what I'm saying? But if you have $1,000 or 2,000 or 3,000, yes, your account can hold that. So I want you guys to know, most people sometimes are limited to how much money they can make. Even though somebody can come in here and quickly make $6,000-7,000, you are limited to $600 or $65 because of your trading size, of your account size. Because you have to let the market do its thing, go up and down, up and down. And every time it goes the opposite direction, your account is going to say, ooh, I don't have $50 to let the market pull minus 50. Now you are out and you are minus $50, yeah? Or you are minus $10, depending on where your stop loss was. Does it make sense? So, of course, because you're a smart trader, you're not going to let the market go all the way 85 pips against you. So you're going to let it go and hit your stop loss. And if your stop loss was like, I can stomach losing $10 or $15, oh well. Most of the trades I win, so I don't care whether I lose $15. That's fine. You're not sitting waiting for the market to go $100 against you. That is not smart. Do you guys understand what I'm saying? But this was a good market here. The pullbacks here were not that. Even if we go down to 15 minutes, you went down to 1 hour, you go down to 15 minutes. They're going to be bigger, but not crazy. I don't think it's going to be that much. Okay, here. Because it's the same thing. Look at it. Look, come on, look at this. It's nothing. This was a really good trade. See? So you could have made good money if you understand how to mark this chart and risk management, and you take it all the way down, you know. But again, you can just decide to take it up to here to be safe, or when we do next time we do our chart, because I won't have to go through all the basic stuff I went through with you, we'll just jump into the chart. I'll show you how you guys can just decide where take profit is based on what happened in the past, the structure on the left side. Let's go back to 1 hour. Okay, do you guys have any question? Okay, anyway, that was a head and shoulder she spotted. Remember, I'm in playback. So this is where you fight the market when you want to draw. You see the W? Remember who was saying you can't spot things on the chart? I quickly see a W right there.
I see a W.
It's right, it's sitting right here. The W is sitting right here.
Okay.
Sitting right in front. Train your eyes to see this thing. Your W. See why we like training?
Inverted head and shoulders. And
Right.
Guess what? There it is. Your W.
Right.
Remember what we said about the W. The W is supposed to take the price up. But remember, right now, you are in a range, even though you see a W. Here is another W.
No, an inverted.
Which is the same as a W.
Yeah. And look, inverted head and shoulders, and look what it did.
Okay. Look at that. You see that? Do you guys see the W I'm drawing?
Yes.
That's all you have to do, guys. Make money in this market. All right? I hope you guys can see. Then all I had to do was come here, take my little line, and wait. Wait and wait. There's only how many candles? By the second candle, it broke through. Two candles, 2 hours. It took 2 hours to break through. When it break through, what you do? You get in as a what?
You buy.
Buy.
Buy the market. You take it all the way to the moon. Boom. How many peeps? Come on. Come on,
I've
guys.
never been there for that long.
There it is.
That's a lot.
Almost 200 peeps.
Oh,
You see
Wow.
that? And guess what?
Wow.
What sign do you have here? What do you have here? What do you see at the top? Come on, guys. We just went through.
I didn't get those.
Adoro and
A head and shoulders again?
yeah, actually, there's a head and shoulder. Yes, there's a head and shoulder, but there's also a candle, a reverse. Okay, let me move this. Look
I
at this
see that.
tiny, weeny, tiny
Oh, I see the head
candle.
and shoulders. That's
Do you
good.
see? Ingrid spotted before we even
Good
did.
job.
There you go, head and shoulder. You take
That's a
your
nice
drawing
one, too.
tool and you mark your head and shoulder, and there it is. And you go down and you go up and you go down. Ooh, head and shoulder. And guess what is there? A
3
little.
hours. It
So
went
head
down.
and shoulder, one confirmation. Support and resistance. Swing high. If you go back further in the past, you will see that something was going on around that area. Let's leave this head and shoulder. Remember how I told you guys, just look what happened in the past to see what is going to happen now, or why things are happening the way they are happening.
Right.
Where is my delete thing?
Delete? What are you talking about?
Oh, here. Let me delete that. Okay. Grab your line here. Market stopped at here.
Nice.
And what do you see here? Did the market reach there before and stalled and came back down?
Yeah.
Did the market go to the same line coming down
Triple
and
top.
go back up? Oh, triple top? Yes. Triple top. 1, 2, 3. Do you see that, guys? All right.
Yeah.
You see these patterns everywhere. So there is your head and shoulder. Let's delete it. And
I see.
you have your reversal candle. So that's 2 confirmation, yeah? And then you have support and resistance. We just saw it, and that's your, how many confirmation? 3. Okay?
3.
And now, if you see head and shoulder, where does the market go? The market went down. Boom. You could have put, oh, I deleted it. You could have put your line right there. Okay? You grab, it's not always perfect, but it kind of give you an idea from swing high to here. Oh, is that swing high? Did I go too high up? There. There you go. And you press it here, and that allows you, but see this, if you had put your take profit right here, you would have missed it because the market stopped right here. You see that?
Stop at the resistance.
Right.
But now, the way I don't miss it, even though I have an arrow, is I don't just depend on the arrow. I look to the left. Ooh, do you see this? You see this here? These 2 here would have made me decide that my take profit is going to be somewhere up here. And I will still have made it. All right? Let's see how many pips that was. I'm not sure how many pips that was, but let's see. Oh, which line did I draw? This one? Okay. Up to the bottom there. That's 34 pips. 34 pips for $1 is $34. 34 pips for $2 is 34 pips for 50 cents is half of that. You guys see? You guys understand?
Yeah.
Okay. How many of you would be happy to make $100 in 2 hours, in 3 hours? 1, 2, 3. That's 3 hours when you're
Works for me.
Yeah.
okay. Now you see the W, boom, boom, boom. Okay. And you draw your line right at the support is already marked. It's right
It
there.
works.
It works.
It's also the
It's
support
already,
that was used to make the shoulders. And the
it's also the same support that came from here. Look, all the way here. But that's what I'm trying to wait for the market to get and break. Now, this did not go far. Hold on, Jasmine, don't do it.
I'm not doing it.
Don't draw it, don't do it. All right, this got here and went up, how many pips? That's about 25 pips. Trust me, guys, even 10 pips, depending on your lot size that you're trading, will give you money. Sometimes it's better you go for 10 or 15 pips and do a bigger lot size and get it and get out of there. Because sometimes instead of going for 50 and 100 pips, I'm like, I'm only here for 15 pips. I'm only here for 10 pips, but I'm gonna do my lot size high so that even though I'll do 2 orders, double orders, 10 pips each, okay? So that gives me a total of 20. I can do 3 orders of the same pair, okay? And those 3 orders will give me 10 pips each. How many pips in total? 30 pips. So if I'm trading $1 each, I have how many dollars? I have $30. Okay? I'm trading $10 lot size, then I have $300 and I'm done. Okay? Does it make sense? And that can
Yes.
1 hour candle. Does it make sense?
Yes.
Yes.
Okay, so now let's play. Let's delete all this. Let's delete all of this. and say you came in the market. You came in the market. You're about to mark your chart before you go to bed or you go to work. Okay, market is consolidating. I don't know it's gonna go up. I don't know it's gonna go down. A huge movement. I'm also gonna teach you guys how to use Fibonacci to kind of gauge where you are, where market is gonna go next. But I'm not gonna do this right now. But this is that's for another day. But it's really a cool feature. So I come here like I did before. I say market is consolidating. I cannot trade this market. I cannot trade this market. I'm just gonna have to wait and see what it's going to do. And I'll do the same. I'll mark this area here.
It's not
Or I'll just box it. Sometimes I just come and I box it like this. I'm like, anything happening inside there, I don't wanna be caught up in it. All right, I'll box it like that. Delete that. And I'll wait. So now let's wait. You are well trained to fight and see market started moving. Let's see. There it is. There it is. Oh, wait a minute. Did it just break?
Yes.
Now, did you come out of consolidation?
Yes.
Come on, guys.
Yes.
I know you can't, but I want you guys to make this money. Okay? There was your bottom line. Did you break that line?
Yeah.
You break it here?
Yes.
Did you break it here?
Mm-hmm.
No, you did not break it here. This is a wick.
Just the wick.
Don't get caught up with the wick. This didn't break it. This was a fake out. It was an entire.
Oh, on that side.
Yes, it was an entire.
Okay, I'm looking at the wrong section.
Okay, it was an entire red candle before it turned green. It could have fooled you to get in the market, but because you're smart, you waited for the hour to be over. And like, I'm not doing anything until it break and close with the body. So that's where we are. So we come here, we see a nice red candle, big one. Always, most of the time, the candle that come out of here is a huge candle. All right, there it is. Okay, and that's where I get in the market. And you make how much? Let's see. You come down, it went down 35 pips, 36.5, about 36 pips. Now, it's up to you how much money, whether you're trading 10 cents, 20 cents, 30 cents, 50 cents, $1, $2, totally up to you. Whatever you're trading, multiplied by the number of pips. Okay? What? Oh, this one here. Yeah, there's a doji here.
Yeah, but look at
So
price.
you
What
can
price
see.
is?
What
1,
about
2,
it?
3.
Okay, so let's play some more.
Zoom out.
Whoa. Look at that market. That's what happened to your market. Okay, hold on. Let's go back here. So now you are in this. If I'm in this market, I will zoom out like that. And the first place where I'll take profit, for me, my target is 2 major places. I'm gonna, actually, let me show you how I target my profit. I will take this. I'll see.
Okay, where's the arrow? I don't see it.
What
Is
arrow?
your cursor?
What arrow?
Your cursor, like which section of the chart?
Oh, you don't see me moving my mouse?
Oh, yeah.
Oh, okay. Yeah, okay.
So I will come here. So now I see this market. When it was moving, remember all this hasn't happened. Now I'm in, I see this. I'm gonna target, where do I wanna take profit? From here, okay? I know a big move down is happening. I'm gonna grab this and I'm gonna look to the left. Remember what I say, look what the market did yesterday and last week. What did the market do before? I start drawing my structure. I look right here, look over here. Do you see something here? What happened here? Market came down, went up, came down, went up, went up. It formed a W. Do you see a W here?
Yes.
Market tried many times, up, down, push up, down, push up, and then all of a sudden, a huge candle came here and broke through, yeah? Then on its way back up, this was support. Now it meet this line as a resistance. What happened when the market broke down? It came back up, yeah? Sometimes in the future, what goes down must come up. What goes up must come down. Sometimes in the future, next week, next day, next 2 weeks, market came back up and met this line, same line, okay? The same line where market was active before, yeah? And what happened when the market met that line? What happened when it got here? It went back down. Do you guys all see these red candles that are going down? Come on, guys, don't sleep on me now. Market went up. What happened when market got there? Did it break?
It didn't break through.
It didn't break through.
Exactly. Market did not break through. It came down. You can see the red candle here. It came down. It tried to push back up here. Could not. It came back down. And then market went up again. What happened when it reached there? It consolidated. Do you all see these little tiny candles? Come on, guys. Don't see
Yes.
Market consolidated. Do you see that?
Yes.
Because there's power
Yes.
in the line. That's how you practice to draw your support and risk. Everything you guys you need to make money in this market is in front of your eyes. You don't need the guru. You just need to practice to watch your chart and know what happened in the past will repeat itself in the future. All right? And then market came there. So you're watching this market. And then what happened? It broke through with a big
Broke through.
okay? Broke through.
Yeah.
Remember
Broke
how I told
through.
you the best market is when it can break through like this, it come right back down and retested. Do you all see where it came back down? Do you see where it came down? Red candle and a doji. You all see this tiny, tiny candle?
Yes.
Mhm.
You see where it came right to the same line, yeah? It's not breaking through, yeah? And then what happened after that? It went up, consolidated a little bit, and the market went to the sky. There it is.
Wow.
Okay? How many pips is that? I'm telling you, everything is sitting right
A lot.
in front of you. A lot. Oh, 100.
Ooh,
How much
138.
is that?
Okay, 100.
Wow.
Okay, and guess what? Here is your telltale. You got your telltale sign. If you are still in it, because I would not probably have waited for it to go all the way up unless I'm watching it and following it. I would have come out like a long time ago based on structures. But if you're watching it, you can wait for it. But the minute I saw that doji there, you see the doji, remember we talked about patterns, candlestick pattern? The minute I see that doji there, I'm like, this market look like it's giving me a sign of reversal. Then I'll look to the left and I'll say, did anything happen here in the past? Let's see what happened in that area in the past, if anything happened. Oh, I drew it wrong. Hold on. I'm going to take this because this goes fast.
Do you see the inverted?
Okay, hold on. So
So what you're doing is just drawing a line for where it is to go back and see the history at that point.
exactly. I draw a line.
Okay.
And I want to know, now I see a doji here, market is starting here. What happened in the past? Oh, wait a minute. This market was a support line in the past. Back in July, market went up, came down, could not break through, went up, came down, could not break through, went up, came down, could not break through, went up, and then it broke through. Okay? Then on its way back, came up, got there, could not break through, went back down, broke through, but very small move. This is, you can't even call this a breakthrough. It broke through to the top, but it quickly came right back down. You see that?
Mm-hmm.
So this area here, even the ones that are breaking through, is not going all the way up here, okay? Then I can go back and see what happened in the past also. Oh, wait a minute. That's what happened back in May. Look.
Oh my God.
Oh, 1, 2, 3, 4, 5, 6 to the bottom to the top.
7, 8.
So
Wow.
now what I'm telling my mind is, oh, there's a strong support and resistance. I better get my money and run. Okay, I don't want to be here. I don't care what happened last. I am happy with $200. I'm happy with $20. I'm happy with whatever amount you made. Okay, get out of there. There's a strong support. There's a doji card up there. Get out of there. And if you're not in the market, you're trying to get in, just wait. Support. I'm like, support. Reversal candle, I'm going to get in as a seller now. Because you can also close as a buy and now say, now I'm no longer buying. I'm coming in as a seller. Okay? You come back in, you wait for this form, and you come right back in and you catch how many pips on the way down? Let's see. You catch 84 pips. Come on, guys. Do you see how you can make money both ways? But you can only make money
Right.
if you knew what you are looking for. When you are going up, you knew where to get out. When you decided to come back in, you knew what to get out. Now, the only thing is you have to be careful once they start going like this. Once this go up here, go down, go up here, go. Now you're entering this consolidation that you don't want to be caught in. Okay? Now, there are people who are able to trade this back and forth. I can. I don't know how they do it, but I just cannot. Right? But there are people who do it. Personally, I'm like, I'm not even gonna bother. So you wait, you draw your line, you say market is playing around this zone. I am not gonna get in until it breaks. And sure enough, at some point, it broke through. It may take a whole day or 2 days, but it broke through. Oh, you jump in, yeah? And you make how many pips? That's 36, then it went back, so you're back to 8 pips, but market pushed down, you're back to 73 pips, market pulled back up, you're back to 48 pips. I clicked on it, and then market went back down all the way to 100.8 pips. Come on, guys.
Wow.
Personally, I would not have gotten 100 pips unless I'm up and looking at it, but I would have set my stop loss or take profit somewhere around the structure here, okay? Somewhere around here, because I'm like, I don't know if it's gonna go all the way down.
And how much was that with the stop losses?
Let's measure it again. You measure from there.
About 50.
About here, right here. That's about 56 pips. This is about 56.
Okay.
Okay, but if I'm watching it, if I'm on the computer watching it, then I will not get out. But sometimes I'm not on the computer watching it. I'm sleeping, or I don't know what time this happened. But if I'm on the computer, then what I'll do is I'll move my stop loss from here. Once the market breaks through here, I will move my stop loss. I'll keep following it. If it goes here, I move my stop loss here. It goes here, I move my stop loss here. Now, once I see it come up, it might come back up and hit my stop loss here or here, and it takes me out. But at least I caught most of the move. Does it make sense? But you can only do that if you are.
Yeah.
Now, let me tell you guys, there's another way to do an automated stop loss where you could be at work, but your line of stop loss is following the market on its own. The only downside to that is you have to leave your computer on. Your computer can't go to sleep. If you do that, okay? You understand what I'm saying? There's an automated stop loss that can follow the market when you're innate yourself, but you're sitting at work, you're not manually having to keep moving this line. Let's say this is your stop loss line. Where is it? Let's say this is your stop loss. Okay, let's make it red. Let's say this is your stop loss. If you're on the computer, what you do is you keep pushing it. As the market goes, you keep following price. Okay, so that if market goes up, it hits you and takes you out, but you have all this money protected, yeah? Market goes down, you move it there. Market goes down, you move it whatever. But in this case, let's say your stop loss is there, market goes up, come back up, hit your stop loss and take you out, all right? You still have the money. Now, if you're at work, on MetaTrader 4, there is an automated stop loss that will automatically, you set the numbers, it will follow the market on its own. Like I say, the downside to that is you have to leave your computer at home on. You cannot, you know how computer go to sleep? Your computer cannot, if it goes to sleep, then you cannot trail it. It's called a trail. We can talk about that later. Because you can do that even when you're home and you're doing other things, not necessarily when you're at work. And when you're home, you're more able to leave your laptop or your computer on, okay? But you want that trailing stop loss to keep following the market so you can capture as many pips as possible, okay? Do you guys have any question? I think I want to stop here because I don't want to keep you guys here overnight, but I want to make sure I answer if you guys have any question. No question?
I don't have any right now. I don't have any questions right now.
Okay, so do you see how this
is
look at that.
It was just to say it was a very thorough training. I've learned more in this session than I've learned the whole time I've been playing with this.
Oh my gosh, I'm so happy to hear that.
Yeah.
Oh, now look at that. Now that market has come to the end. This is where we are in the market right now. But what do you guys see right now is happening? What do you guys see is happening in the market right now?
Consolidation.
Consolidation. So let's delete all our drawing again. Let's delete and say market is literally consolidation. It's consolidating. There's really not quite clear. You can see this. There is no clear move. Okay, I'm going to box that market like that, and I'm going to grab that.
Wait a second.
I'm going, what? What happened? Oh, double, triple top? 1, 2, 3. Yeah, there's a triple top there. And there's a double, 1, 2, 3. 1, 2, 3, 4. Okay, there you go. So you guys, all you have to do is this. Okay, let me. This is all you have to do. Go to sleep, Jasmine. Come on.
Oh, we can't go?
Go to bed. Yeah, come on. I even told the ladies they can go to sleep if they have to.
I know, but I want to stay.
Go to bed. Thank God you don't have school tomorrow.
Oh, I would not wake up.
Okay. All right. So you guys, this is what I'll do. I'll box that whole section. I'm like, I cannot get in a trade here. So I'm gonna start looking. So what I'm gonna say is, I'm like, I don't know where this market is gonna go. Okay. So what I would do is I will mark. This is where I want the market to break, because it has not been able to break 1, 2, 3. Yeah. It hasn't been able to break this area. Yes or no? Yes, yes. Come on, guys.
Yes.
It has not been.
It hasn't
not
broke it.
broken.
Okay.
It hasn't broke it.
First of all, I need to go to like a month and see whether I'm hitting bottom. Oh, wow. Look at that. Look where we are in the market.
Shoulders.
You see this? This go back to 2003. 2003, market was down. Market went up from 2003, never came back. Ooh, we are in some dangerous zone here. Market never came back to where we are until 2015, 2015, 2015, 2016, 2017. So we're really at the bottom of this market, all right? So I kind of have an idea that we are at the bottom, okay? So I go back to my 1 hour. Come on, Jasmine. I go back to my 1 hour. Good night. I love you. All right. Say good night to the ladies. I'm done with them.
Good night, Jasmine.
Good night.
I will be done with them in the next few minutes.
Good night.
I don't want to call another trade.
Good night.
Please will keep us for 3 hours.
Thanks for your help.
Okay, so I'm going to box that market like that. Okay, and what I'm going to do, if you guys can see, I am going to. What do you guys think I'm going to do? Cora, do you know what I'm going to do? You see my images all the time. I'm going to do like this. I want to see this market. Oh, how do I do this? I want to see this market. I want to see this market do like this. I don't know, this is kind of, let me delete this. What I want to see right now, I want to see this market do this, break through this line, because we already determined it's been able to break through, yeah? Okay? Yes, yes?
Yeah.
Go to sleep?
Yes.
Okay. So if you're muted, I can't hear you. I need class participation, as long as you don't have background noise. Because I'm sitting at the bottom of this chart, like areas where market hasn't been in a long, long time, I want to make sure it breaks through. I want when it breaks through to come back and test this line. It could be 1 candle, 2 candles, and before I come in, I want to see it come back up, okay? Then after it tests this line, coming from this side, then I'm gonna take the market like this, all the way down, and that's where now I'm gonna go back to maybe daily, because I need to see what's going on the left again to decide my take profit. Let's see. Wow. I can't even see it. Oh, there it is. You guys see this red line here? You see this line here? That's where market is. That's
Mhm.
just the market going.
Yeah.
So now I have to fight structure. Where did the market stop before? From this line down, yeah? Okay, the first place I see,
Right.
you guys see what's on the left? This is our line here. Maybe I need to put a real line where the market is so you guys can see properly. So next time you mark some chart, to make some money by the time we meet next time in your demo, not in your live account. Do this on the demo. Do not take this trade. I'm not giving you trade things to trade. So this is where we are in the market. All right. Now the next structure I see is right here. You see right here. You see right here. Market went,
Right.
and then right here. This is like really my target right here. I would want to target right there as my area of take profit. Okay. And
Okay.
then this will be my other place right there. Market went there. Okay. These are big pips, you guys. This line may look close to each other, but watch. Watch. How many pips are there? 260, 221. Yeah.
Ooh.
Because I'm already looking at daily. That's the only place I can find structure. So right now, from where
When was that? And what year? 2017?
This was 2017, yes. There's nothing else. Market never
Oh,
came.
okay. Okay.
We just coming, look, from 2017, we went up and never came back. We just literally coming back in this area here. Now coming here, we can go down, or market might reach here like it did before. Look what happened in April of this year. Market came very close here and it went up. Every time it come back here, it goes up. Then when was this? This was August 1. Market came all the way here. Look at that doji. Did we talk about the doji candle as a reversal candle? What did the market? They refused to break through.
Back the other way.
Now, today, we are back here on the same, sitting on the same line. Okay. Now we have a live candle here. We cannot assume that this candle, even if it goes all the way down, we cannot assume it's gonna break through because what's the time now? It's 11:46. It's gonna close in another 14 minutes. Yeah. Don't get in the market with a live candle that is still forming. Actually, sorry. This is not 15 minutes. This is tomorrow because we are on the day. We have to go to 60 minutes for the 1 hour candle. You guys understand what I'm saying? So just work with me.
Yeah.
If I'm on a daily chart, it's gonna take 1 day to form, which is from 5 to 5 p.m. to 5 p.m. Okay. So for me, I'm looking at my area of take profit, and I'm actually gonna get in this market one way or the other. All right. So from
Now,
here.
did you say the market's going to close at midnight?
No, I never said. I know it was on the 60 minutes. Yes, on this chart here. Let me show you.
You're breaking up a lot.
On this chart time frame, this candle here is gonna close in 13 minutes. This one here. See this candle here? You all see this candle? This candle is going to close in 13 minutes. But guess what? We're still sitting on the line. I don't count the week. Market is coming here and it's getting rejected. Yeah. So
right.
I don't know if I want to sell and I don't know if I want to buy because of the way the market is behaving, price is behaving. There's 1, 2, 3 touches. This fourth one could break through. Usually the fourth trial always kind of most of the time break through, but I don't know. I'm in a very strong area right now. So I'm not going to assume. So I'm just gonna be ready to get in if it works. All right. What I'm gonna do is I am going to go and find my area of take profit. Actually, I could have used this. I could have used this. It's an area here. I don't have to go to the day. I can just go right here. My target can also be right here. You see, you guys here, market broke through, came back up. Okay? You all see that? You all see this thing here?
Yeah.
Okay, hold on. And do you all see
Yes.
the W? It's not a perfect W, but you're gonna have to see them. I used to say this and I'll be like, yeah, there's no way my eyes can see this stuff. Okay? But you can see it. Double bottom, triple bottom, you can see them if you look. Okay? You can see them if you look. You don't even have to force it. There it is. It's not perfect. I don't even think you guys can see this line here. But there's a W here. You all see that? Where did the market go?
Yeah.
Where did the market go? To the moon? Who sees something up here? Look around here. What do you all see? Oh, we saw this before. That's the head and shoulder and the doji. So anyway, let me get this going so I can get you guys out of here. We've been here for 3 hours, but I hope it was worth your time. Okay?
Yes.
Yes, thank you.
So what I'm gonna do, how many pips are this? If I get in on a sell, I'm probably not gonna wait all the way to the bottom. It might touch with a week and that's fine, but if I wanna be safe, just to be safe, I'm probably gonna move it right there. If it's worth it. Let's see, how many pips are in there? That's not a lot of pips. That's about 20 pips, okay? But I'll still be happy. Hey, if I go to sleep and I make $20 or $40 I didn't have before, I'm happy, okay? Now, after that, the next place where I can take profit, I cannot see it with this 6-minute chart. That's when I move to either 4 hours or daily, so I can see what happened in the past. And sometimes when you do that, you have to wait for the chart to load. So I'm gonna go back. I have my line here, that's my guide. Okay, I can't see it. Gotta go to daily. Daily, wait for the chart to load. It might be slow because I'm sharing my screen for me. Okay, there it is. There it is. Okay, now, you all see where we are coming from. We are coming from here. This is where we are. This is where is it? Where are we? Price is right here, okay? That's where we are, this pink line here, okay? Now, I am going to mark these structures here. Take your line, mark that. You all see a strong area there? 1, 2, 3. Yes.
Yeah.
3, yep.
Okay, what do you think will happen when price meet it as a support? This was resistance, up, down, breakthrough, came down once. What do you think this market might do when it gets here? Might stop either a little bit, or it could come here and just push back up. So why not set my take profit there so that I am protected? Okay, that's 245 pips. You all see that? You all see that? Okay. Now, you can go down with this market, or you can say, I'm just going to wait until I see what happened, but the market could still push down. Now, what if the market get here? What if the market get here and decide, just like all these other previous time we saw, I'm not going to break through, I'm going to go up. I'm going to go up. So then I go back to my 1 hour, okay? Because that's where I'm marking the chart. Market decide. See, market is about to here, it's about to close in 8 minutes. This candle might decide, and the next candle, we're just gonna stay here, continue consolidation, or we just going to break through, or we're gonna move this market all the way up. Then what I did was I want break, test, take the market down. I have my take profit mark, or this market might decide, we're gonna just go right back up, continue consolidation, or we wanna break and continue to go up. So what I wanna see is market do that, come up, break through here, because you can see it's refusing to break this area. I will only enter a buy, and this is a big area, you guys here. This is such a big area. You have to be patient with the market. You're trading more than one chart. So look at that. Actually, that's not big. That's not bad. That's only 40 pips. Yeah, I can lose 40 pips to gain 100 or 50. You understand what I'm saying? But I want to be safe. I'm not messing around with my money. So I'm going to wait for this market. If it refuses to go down, you see the bottom, I'm protected. You all see I'm protected on the bottom as a seller, yeah? You all see that I know what I want to happen. I want break, retest, take the market, I mark my profit area. Same thing. If market decide I'm not gonna go as a to the bottom, I'm gonna go up. Finally, I'm gonna break. I don't care when it break, whether it's tonight, tomorrow, 2 days from now, or a week from now. I don't care. I just wanna market. I wanna see it break through, close with the body, come back and test this line because it's a very strong line instead of just going, and then I will take the market to the moon, wherever I decide to go. One thing I can tell you, wherever it's going to go, is going to go high. If it goes up, it's going to push up high, right? Coming out of all of this, right? You guys see? How do I determine my take profit? Anybody want to take a guess? Because I can't just go up blindly. How do I decide, okay, I'm going to take my first level of profit here? Look at it. It's telling you, it's sitting right in front of you.
You look at where it's been previously.
Yes, exactly. Where has market been in the past? It's sitting right here. It's screaming at you. Look at me. I got here and I went up. It's sitting right there. Do you all see that? Do you all see the market came down?
Yes.
Went up, got to this level, and what happened? Whoa, it ended right back all the way down. It could not break that level. What makes me think that when this come here, it's going to break it. If it didn't break it, let's even see if there was another time. Let's delete that. Let's use this. Let's see if there was another time the same thing happened. Let's see. We probably can go back to daily or 4 hours just to see if something like that has happened in the past. What do you all see? Do you all see that this line has been touched in the past? Look at them wicks, okay? Some candles broke through but didn't go anywhere. Can you call this a breakthrough? Yeah, it broke through, but did it go anywhere further? No. As soon as it broke through, it came back up. So this whole zone here is being rejected. Look at that. And to see. Yeah, these are all fake outs. You see that area? You want to know that it's a fake out? I'll show you how you know it's a fake out. Because even if you go to the week, if you look at it from the higher time frame, that's back. What am I doing? Hold on. You guys, if you have to go, I know you have to work. I totally understand. Now, if we go to week, all that highlighted area, you're probably going to just see weeks from the candle. Nothing, no body, no nothing else. There it is. What do you see there? What do y'all see here? Weeks.
Nothing.
So could you call that a breakout? So you have to know so you don't get spooked out by the market when the market prepares that it's a breakout and there is no breakout, right? If the market did not go far, it's like, think about when you're driving a car, yeah? There are speed bumps on the road. If you meet a tiny, tiny speed bump, is that gonna stop your car if you're coming full speed, a tiny one? Is it gonna stop you? Like, whoa, would that stop you or move your car or jack you up? No, because it's small. You feel it, something will slow you down, but it will not be major, yeah? What if you were driving full speed and you meet this huge bump on the road? What's gonna happen to your car? You're gonna have to stop, yeah? Or it's gonna jack you up with a lot of force, yeah? It's the same thing with the market. If the market meets a tiny, itsy bitsy resistance, that's not gonna make the market go down. You have to look for the major areas where the market got there and just ran the opposite side. It could not break through. Like this one here. Market got there, whoa, came all the way down. Could not push through. Got back to the same area, whoa, could not push through. Came back again to the same area, could not push through. That's what you want to see. But not a tiny one and say, oh, look, it broke here. No, it did not break. It didn't go anywhere. It broke, but it did not go anywhere. All right? So what I want to see here is market breaking that structure, break all of these, retest, and go up. Then I'll come here and I'll say, I don't want to mess around with this area here. I've looked in the past and I know market has come here before, going up and it stopped. And I also saw market came here going down and it stopped. So this is my first line of defense. So I'll go like this. I'll be happy with 47 pips. I am totally happy with that. Okay? Take my profit there. If the market continues to go up, I can jump right back in. If it breaks this, and continue to go up, I will get right back in, and I'll take my next take profit where? Where's my take profit 2 on the top? Right here. Look what happened here before. Did the market do something here? Yes. It came here and it stalled and it consolidated, and something is going on right here. Right around here, something is going on. And that something could repeat itself. Hold on. Oh, sorry. That something, whatever happened there, could easily repeat itself. Hold on. Whatever happened there could easily repeat itself right here. Okay? Could come back, either consolidate or pull back a little bit. So again, I'm taking my profit there. I'm not going to be caught up in that area because I'm not sure. It's about 20, 25 pips. You see that, you guys? If it breaks through and I'm watching it, or I catch it the next morning when I get up and I look at it, then I can take another. Or I can just say, I'm done for the day. I have had enough pips for the day from here all the way to here. I got 71 pips. I'm happy with that. Don't be greedy. You don't have to capture everything. All right? That's how you decide where to take your profit in the market. And I think that brings us to the end. All right? And you can also see, not only did the market consolidate here, you see, you know what made it consolidate here? Look what was happening here. That is the same consolidation we were looking at earlier. See that? But you guys see a name that broke this market to the bottom? There it is. There's a name right here sitting in front of you. There's an M, double top, sitting right there in front of you. Okay, and your job is to pick a trend line and draw what I showed you when we started. Draw that line there and say, I'm gonna sit and not do nothing until the market breaks here. Okay, right here break. Did it break? Yes, it broke. Watch this guys. Okay, it broke here, came back. Did they test that line? Come on, you all see that? Did they test that line again? It broke through, tested the line, and where did they go? Yeah. They went to South Pole.
Back down.
Went all the way down here, 120 pips. Okay? I'm not saying you'll cut the entire move. You take your profit based on structures that you see along the way. But it did. So you can see what we are saying, the telltale sign, and there is your doji. You all see this candle here and these two? So market is here, you see that, you see that, you see an M shape, all your confirmation. Oh, do I see an engulfing candle? Oh, yeah, right here. Here is your, and you have a lot of confirmation here. Okay, that whole candle is about 50 feet on its own, this red candle. So you have a lot of confirmation. You have the M shape, you have the candles here, the doji candle, you have a engulfing candle, you got your neckline here on the M, waiting for it to break, and you wait for it to be retested. There's a green candle, broke through, tested with this, take the market down. Came down, tested again, boom, and you're good to go. Alrighty? Ooh, I can go on and on.
All right.
I think
Hey, thank you.
Thank you so much.
this is how you box the market. So
that was very informative, Liz.
Yes.
Next time,
Thank you.
next time I'll show you guys. See this chart, because I don't know how long it's going to consolidate. This could take another 2 days. And who want to be looking at the chart every minute to see what happened, yeah? I'm going to show you guys next time how you set pending orders. Because the breakthrough could happen when you're sitting at your desk at work. What are you going to do? You're going to miss the move, yeah? What if the breakthrough happened tonight when we are sleeping, either to the bottom or to the top? We lose the move. So I'm going to show you, before I go to bed, what I'm going to do is I'm going to set what we call pending orders. All right, you can set an order that when the market does this, come back and pick me here and take me all the way to wherever my take profit is. So that can happen automatically when I'm sleeping. The same thing here. I can set orders, pending orders, so that when market come here, do what I wanted to do, it can pick my order and take me to the bottom, while I'm at work, while I'm shopping, while I'm sleeping, whenever. So, but we'll do all that stuff next time. so that you guys can set up automated order.
Okay.
Already? So that's good.
All right.
Thank you.
Everything is free to go, but if you have a question, feel free to hang around. I am free to answer it for you. If not, you can have yourself
Okay.
right. Now let's guys, we should do this personally. I'll say if you guys like it and you want to do, I promise not to be keeping you for 3 hours. I promise you. Next time we are just getting into the chat because we did the basic. So if we do a chat for an hour or two, that is fine. But if you're good, then I'll be sleeping. I don't have to do it.
Good night, Liz. Thank you.
Yes, thank you so much.
You are so welcome.
Thank you. Have a good one.
Good night, everybody.
Have a good evening.